Welcome back to the European market open. A minute to go until the start of cash equity trading. I'm Francine Lacroix here in London. So first, here are your top stories. Germany in limbo. Olaf Scholz's center-left Social Democrats narrowly defeats the Chancellor Merkel's Conservatives, but experts warn we could see months of coalition talks. Evergrande fallout spreads. Wealthy investors join thousands of Chinese households demanding their money back from the embattled developer. Another dollar bond payment is due this week. And panic at the petrol pumps. Fuel shortages pile pressure on the UK's Prime Minister as the impact of Europe's energy crisis goes global. So let's take a look at the futures. I have to say, if you look at markets in Asia, they were a little bit, I guess, all over the place. Some were rising, some were down. If you look at the futures, they've actually been holding on to solid gains. Partly, it's the commodities that got a lift, but we're worried a little bit about regulation in China. You can see the DAX futures gaining some 1.2%. No surprises, actually, from the German election. Speaking of no surprises, let's check our global macro movers to be sure that there's no global macro move surprise as some of these stocks open. Now, I did want to point to some of, for example, the currency. So this is our foreign exchange, Australian dollar, an important one just because there was a lift from some of these commodities in general because of demand for example, not only the reflation trade, but of course the economy that could have a boost in Asia. And that's giving a lift to some of these commodity-rich currencies as well. Look, here we're pretty much as expected, gaining some 0.6, 0.9% higher. A lot of the focus will be on regulation crackdown from China, and we have a couple of central banks also speaking a little bit later. Commodities, you can see iron ore gaining, gas, Brent. I mean, gas, what a story when it comes to fuel shortages, not only in Northeast China, but also here in the UK, where the Prime Minister now needs to think about sending possible military personnel to drive some of the trucks. So UK natural gas getting some 2.8%. So this is a nice global macro mover. I don't know whether we have the sectors or whether we want to have a look at the sectors, or we want to wait for those to settle a little bit. Banks are on the up. You can see autos. I mean, for the moment, we're getting a little bit of support across the board. Again, nothing huge. The German election for the moment as planned, coalition talks, but we don't have any far left or far right, we think, coming into a coalition. And then we're just in a wait-and-see situation for these gas prices. Technology, also a nice lift, 0.7% higher. So European equity markets opening higher. This is the picture that's after Germany's SPD actually narrowly claimed victory in the German election after a pretty incredible tight race with the CDU. That's according to provisional results. And remember, this year is a little bit different because there's postal votes coming through. With no clear majority, both Olaf Scholz and Armin Laschet have claimed they will attempt to lead a new government. And with third most seats in the Bundestag, the German Greens are likely to play kingmaker. So for more on all of this, we're joined by Bloomberg's Maria Tadeo in Berlin. So Maria, SPD think they have mandate, CDU think they have mandate. Who will try and form a government first?
Well, you know, Francine, now it's a competition to see who reaches out to the Greens and the FDP first. Both the Social Democrats and the Christian Democrats say that they're coming in so close that they have a valid case to try to form a government. What I would note is that yesterday, Olaf Scholz said the fact that the SPD added seats in the election and the CDU lost seats means that he should have the first option to go ahead with those talks. The issue for Armin Laschet, of course, is that he has to move in quick he knows his own job is on the line, particularly when you look at the very bad re-election results that the CDU and the Union had. Now, in terms of the kingmakers, we're focused on the Greens. Of course, we know that they came in third. They're ready to work in many ways with both the SPD and the CDU. So the focus today, this morning, Francine, in Berlin, in the political conversation in the city is very much on Christian Lindner, the head of the Liberal Democrats of Germany. He's now seen as a man that really holds the key, and it will depend on Christian Lindner whether the country stays with the CDU, with a weak CDU, I would say, in government, or turns to an SPD-led government.
Yeah, and he has always said that he wants the finance ministry job, Maria. If he gets it, how different, will the coalition be, or what does it mean for German businesses?
Yes, and Francine, it's worth remembering that in the previous election, Angela Merkel reached out to Christian Lindner to form that famous Jamaica coalition that we talked about for weeks in this election too. And he walked out of the talks when he did not get that finance ministry that he was hoping for. So, of course, he is looking after a big job, especially now that he holds the key. In terms of some of the big areas in which the FDP has come in with big proposals, they say that when you look at cutting emissions, and that could be an area of problems with the Greens, he argues that a lot of this has to be left to the market regulation. This is not just about the government and government regulation. This is also about self-governance from markets. He also says that Germany should take longer, that the industry should not be under huge pressure to do this. He does, however, say that the country needs big investment, that he's not too caught up on the black zero, no new debt, that the country does need to modernize in many ways. And then, of course, the other thing to factor here is that he's also been very clear that the natural ally in terms of the manifestos for the Liberal Democrats is the CDU. One thing that I would note just very quickly, Francine, yesterday he gave an interview to the German TV, and he said something that was really interesting. He said, before I speak to the SPD or the CDU, we need to talk with the Greens and see where we agree, and then we'll take it from there.
Okay, so interesting, Maria. Thanks so much, Maria Tadeo there in Berlin. Now you can get all of the latest news, also analysis from our team. Just go to TLIV. They've been running a fantastic blog, especially on the German elections. Now joining us is Holger Schmieding, chief economist at Berenberg. Holger, you were with Maria and I yesterday as we were going through the numbers. Now that the dust has settled a little bit, how do you see this new government panning out?
Well, first of all, the tail risk of a red-green-red government has been taken off the table. That is excellent news for the German economy, which means that the two options that we now have to form a government, the Jamaica and the traffic light, will both again straddle the divide between center-right and center-left. And as a result, there will not be a big shift in German policies in any direction. Instead, what will continue is the tilt of the last 8 years that we've had towards going a bit greener, a bit more investment, a bit more relaxed attitude to fiscal spending. And whether it's traffic light or Jamaica, the overall difference, interestingly, would be fairly minor. For instance, in a traffic light coalition, where many investors thought more of a center-left coalition would mean more fiscal spending. In such a coalition, Mr. Lindner from the FDP, the prudent party, would likely be finance minister. So there are a number of sector themes here, but no big change to the overall German economic outlook from these two options, traffic light or Jamaica.
So, Holger, we're trying to understand the market impact, and as an economist, you have a great understanding of what could change. What does it mean for renewable energy in Germany? And what does it mean, for example, for real estate prices, one of the big unknowns, if we would have had more regulation?
Exactly. Significant extra regulation of the real estate sector is probably off the table. The Free Democrats, the Liberals, will be needed for the government, and they would likely object to that. Instead, the focus will probably be more on helping people on low incomes to cope with higher rents and on building more houses with just a little bit of extra regulation. The Greens will almost certainly insist that we get a further significant push into renewable energies. The Liberals will insist that this is done mostly with market-based instruments. That is, they think that it should be done in a different way than the Greens, but in terms of where we are going, namely significant further reduction in CO2 emissions, significant further strides into renewable energies, that seems to be clear.
Holger, why do you think actually Mr. Olaf Scholz has the advantage here in government or coalition building? It seems to me that if you're a Green or if you're the Liberals, and actually if you say, right, well, the CDU has lost 1 million votes to the SPD, I can get a better deal with the CDU than I would with the SPD.
That is absolutely right. Mr. Scholz has the edge because his party has won votes, and the Greens and the FDP also have won votes. And Mr. Scholz, the SPD, is ahead, but only narrowly. That means, indeed, as you suggested, Mr. Laschet from the Conservatives is under pressure. He either gets into the job or he is a big, big loser. His constraint, however, is that even if he wants to offer the Greens a very good Green Deal to get them on board, he would have to keep his party together, and especially the Bavarian CSU segment of the Conservatives. The Bavarians might bark at coming too much towards the Greens. So, indeed, it is a bit of an open question with a slight advantage for Mr. Scholz, but it may take weeks of parallel sounding out talks between these parties before we know what's up. And indeed, it looks fairly likely that the Greens and the FDP, if they can sort of get together in a back room, will between them decide whom they would offer the senior role, Mr. Scholz or Mr. Laschet.
Holger, thank you. Holger Schmieding, their chief economist at Berenberg. Now, coming up, with the SPD just edging ahead of the CDU in Germany's elections, we continue our coverage and we continue analysis of the results with a whole host of guests right here on Bloomberg TV. Up next, though, panic at the petrol pumps. Fuel shortages pile pressure on the UK's Prime Minister as the impact of Europe's energy crisis starts to spread to the rest of the world. We've got the big take story next. This is Bloomberg.
Companies that can move the fastest and be the most agile, no matter what change comes their way, no matter how fast it comes their way, these are the ones that are going to survive and thrive. China's a good example of that now. You see across the board some of the rules and regulations that are changing, or maybe the uncertainty that's coming out of the Chinese government, and they're trying to deal with some of the local challenges that they have, both in terms of how to manage the asymmetry between the haves and the have-nots locally. They're trying to deal with the issues of managing data and security and other aspects like that. The companies that can operate in China and around the world collectively in a bipolar way are going to be the ones that come out of this on top.
Are investors going to come out on top, though, or are companies looking to do business within China from the United States, are they going to come out on top at the moment, Bob?
Yeah, it's clear that the investors are in for what I think is going to be a bumpy ride. You see it today in terms of what's happening in the marketplace.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back, everyone, to The Open. We're 12 minutes into the European trading day, and you can see actually quite a lot of support still for these European stocks. Now, the stocks Europe 600 gaining some 0.6%. The DAX actually holding pretty strong. It's the day after the German elections. Again, we could be looking at a couple of months of coalition building, but at least what we hear from the markets is that the extreme left or the extreme right don't really have a chance right now of being in government, and so maybe that's giving an extra lift to some of these stocks. Also, real estate. Look out for real estate in Germany. We were talking about extra regulation. That doesn't look like it will happen. So let's take a look at some of the other stocks that are moving this morning. We start with IWG. Our Danny Berger was bringing us the very latest on IWG, exploring a breakup and a U.S. listing for Worka. This is according to Sky News. The other story we're looking at for, or actually the other mover, is Rolls-Royce winning a U.S. Air Force B-52 engine replacement program. So that's giving also a nice little lift to Rolls-Royce. And then I'm looking at Shell. Remember, there's a huge energy crisis, not only here in the UK, but across the world. We did hear from BP in the last couple of days, looking at how much focus and how much of the shortage will impact, for example, BP. British energy suppliers are dropping like flies. One company said confidently it isn't going anywhere, and that's Shell Energy, the UK power and gas retail arm of global energy giant Shell. So let's get the very latest on the intensifying energy crisis. Here in the UK, the government took emergency measures to try to ease fuel shortages across the country as gasoline retailers shut pumps after days of panic buying. Joining us now is Alaric Nightingale, who leads Bloomberg's European oil markets team. So thank you so much for joining us. I mean, this is crazy. Okay, first of all, we can't find taxis because we can't find, fuel almost anywhere in London and across the UK. Yeah. And so now the UK is thinking about getting, for example, the military in to drive the trucks to bring the fuel. How does this end?
Well, first of all, there isn't fundamentally a shortage of fuel in the UK, as you know. So ultimately, if people stock up now, there's going to come a period when demand should ease, and that will help to alleviate the crisis in fuel. There will just be less demand in, whether it's 3 days, 4 days, a week's time. Demand has to drop at some point because we don't need more fuel than we need. So that will help. This may well create a concertina effect, which will be less positive, because suddenly you're having to refuel much more quickly than you expected. So the problem, which was a supply chain issue, has been complicated. So now there is more of a supply chain issue where, lorries won't be where they should be. So that's going to create a disruption. But ultimately, I guess it's a mixture of drivers and just demand normalizing and people, becoming a bit more calm about the fact that we do have supply in the UK.
Yeah, but I mean, 2-3 days, if you're driving a cab or if you actually need to get from A to B, is a very long time. Like, are there going to be, things put in place so that this doesn't happen again?
Well, first of all, clearly the government is talking about bringing in more drivers from overseas and, using the army in the short term. And the overseas drivers, I guess, will help with the longer term issue. And, but even there, it's not like Europe doesn't have a shortage of drivers. It's not necessarily the kind of perfect solution to bring people in, or just to say that you can. They're not necessarily going to come in overnight. So we do have an issue that needs to be resolved. The question is, how structural is this problem? Once we've got over this hump of problems, are we going to have months and months? I'm not so sure. I think that once we do calm down, there's going to have to be a normalization because we do have the supply and we do still have lots of drivers. There's just been a short-term issue and people have obviously got very concerned about it.
All right, Alaric, thanks so much for joining us. Alaric Nightingale there on the UK fuel shortage. Now, as Europe grapples with the looming energy crisis and record high prices, it's not the only region in the world to be affected. In fact, in China, residents in several northern provinces are dealing with blackouts as the country faces shortages of coal and gas. So for more, Bloomberg's energy reporter Stephen Stepczynski joins us now. And Stephen, this is also part of our big take where we look at fuel shortages around the world. In China, the situation is actually pretty bad. Can you walk us through what each region should expect this winter?
Yes, I think what you're seeing in Europe is going to reverberate around the world when it comes to their natural gas shortage, because demand for heating in the winter is the highest, and Asia is the biggest importer of natural gas already. You're seeing in China not only its natural gas, but there's a coal shortage because prices are so high, it doesn't make sense for the power plants to produce electricity. And that's already, and for some parts of the country, resulting in power shortages, blackouts, power rationing. It's quite difficult. This could increase electricity bills in Korea. You're already seeing Korea's electricity utility boost the price that their consumers have to pay for the fourth quarter. The same could happen in Japan if there's a sudden cold spike. For economies that are more cash-strapped, like Pakistan or Bangladesh, they might not be able to afford fuel, natural gas, because it's too expensive. And that means that when November, December, January rolls around, they're not going to have enough fuel to power their economy, power the factories, have electricity for the households. And also, Brazil is dealing with one of the worst droughts in nearly a century, and they're depending more and more on natural gas. So that region as well, South America, needs natural gas, but prices are very high, and that's boosting the price of electricity there as well. So when you get to the winter, there's a finite amount of natural gas in the market, especially LNG, the liquefied type. And you're going to see all these countries fighting over a finite supply of gas, which will just lead to, a price war. Prices are going to hit potentially record highs if it's just a normally cold winter. And that's going to boost the price of everything around the world, from ceramics in China to electricity in Brazil. Everything could potentially jump in the near future.
So, Stephen, who are the potential winners in all of this, right? I mean, we're trying to figure out in the last hour exactly what this means for gas exporters and the likes. I mean, could they be, winners in the short term, but then actually be really hurt longer term?
Yeah, that's a good point. In the short term, yes, they will benefit from the higher prices, the larger demand. But because of this price instability and this volatility, it could push some economies, and especially the ones I mentioned in emerging markets, away from LNG and away from natural gas, away from these fossil fuels, because these spot prices are just so unpredictable that they'd rather just go back to the good old coal or something like that, where there isn't this mad dash in the spot market for these cleaner fossil fuels that boost the prices. But in the meantime, these exporting countries, the U.S., Qatar, Australia, will benefit. And more so, the traders, the middlemen in between, the trading houses are bound to also take a pretty hefty profit from this as well.
All right, Stephen, thank you so much for all of the reporting and, of course, also explanation. Bloomberg's energy reporter there, Stephen Stepczynski. Now, coming up, we hear from the DBS chief executive on China's recent crackdown on crypto. That's coming up shortly, and this is Bloomberg.
如果佢唔係屬於呢個風險嘅地區咧，就全部由聽日開始咧可以恢復翻回港嘅安排啦。呢個計劃咧就將喺9月15日咧就正式推出，名額咧係深圳灣口岸同埋港珠澳大橋香港口岸每個口岸每日各1000人，咁即係話每天咧係合共有2000名非香港居民可以通過來港易咧係豁免檢疫咧係抵達香港。
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Bloomberg.com webinars.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back to the Open. We're 22 minutes into the European trading day, and you can see gains are holding up. So we're not gaining as much as we were 10, 15 minutes ago. The DAX gaining 0.8% instead of the 1.2%, but still we're in the green, so we'll take it. Now, Singapore's DBS Group is not worried about the Evergrande crisis having a wider impact on Asian banks. Speaking exclusively to Bloomberg, the chief executive, Piyush Gupta, also weighed in on Beijing's clampdown on crypto.
I think this whole journey of how do we move to a new form of money and a new form of assets is going to take time. These are not easy transitions to make. In its nature as money in particular, I think there is a pathway for having digital money, but it will obviously face serious headwinds because it comes in the face of monetary policy challenges, macroeconomic challenges, etc., KYC, AML challenges. So digital tokens as a means of medium of exchange or unit of account will be a little bit choppy. I think central banks will have a role to play, and they'll probably want to issue their own CBDCs. Digital assets as a store of value, a la Bitcoin, Ethereum, Ripple, etc., might also see some choppiness. But I do think that given there's a couple of $1 trillion of it floating around, it's already got some roots. Now, if you look at what we've done with our approach, we've taken a cautious approach, just keeping an eye on this tremendous uncertainty in the regulatory landscape. So we've not created an exchange which is available to everybody in the mass market. We've been deliberate. We make it available to accredited investors and institutions. And we're trying to proceed with it which in a way that allows us to benefit from the regulations and the regulated nature of entity that we are. And so far, we're quite pleased with our own progress.
China's clampdown has been the black swan for investors for the most part of the year. How exposed are you to Evergrande, and what provisions are you making for it?
Now, we have no exposure to Evergrande, is the short answer. Our own strategy on China for the last several years has been built on building independent credit decisions and credit underwriting. We don't rely on notions of too big to fail or state support. And so as a consequence, even through the entire pandemic, the last couple of years, we've kept our noses relatively clean. We've not had any meaningful or material credit issues or challenges. And frankly, you call it a black swan. Some of it was unexpected. The timing was unexpected. But the notion that over time, the Chinese would start putting regulatory processes in place around many of their sort of unregulated sectors, I think that writing was on the wall. And even in the last couple of years, the P2P space, they brought in regulations. Over 3,000 P2P companies shut down. And they started creating a set of regulations around a lot of other technology sectors. So I think over time, they're trying to see how they can create a more regulated industry broadly, and in some ways level the playing field.
DBS Chief Executive there, Piyush Gupta, speaking to her, Haslinda Amin in an exclusive conversation. Now, this is the day after the night before in terms of the German election. We're hearing from the SPD leader and the Chancellor candidate Olaf Scholz receiving flowers actually at the party headquarters in Berlin yesterday. Unexpectedly, he also gives a impromptu speech right as the election results were coming in. Mr. Scholz saying that the coalition agreement is possible between the SPD, the Greens, and the FDP. He also said that he thinks voters signaled that the CDU should go in opposition.
is just a lot of demand right now for products, whether those be items for our home office or for backyard entertainment. This has been a consistent issue for the past year or so throughout various lockdowns. The global supply chain is made up of ships and trains and trucks, and it's designed for predictable patterns of demand, which is the exact opposite of what we have right now. A lot of uncertainty about whether certain economies are going to be open or closed based on the outbreaks that they're having. So we're just seeing a lot of confusion, a lot of chaos, and a lot of uncertainty disrupt the whole system. The auto industry is very reliant on semiconductors, these memory chips that are in basically everything we buy that has sort of an electronic component to it. And they come from certain economies in Asia like Taiwan, where they're having trouble meeting the demand. The supply chain issues are going to be around as long as you think the virus is going to be around. First or second quarter of 2022 is when a lot of people see the normalizing of all the shipping and transportation disruptions that we're seeing. But if they don't, we might be dealing with this for another year or two or three.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kayleigh Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Germany in limbo. Olaf Scholz's center-left Social Democrats narrowly defeat Chancellor Merkel's Conservatives, but experts warn we could see months of coalition talks. Evergrande fallout spreads while wealthy investors join thousands of Chinese households demanding their money back from the embattled developer. Another dollar bond payment is due this week. Plus, panic at the petrol pumps. Fuel shortages pile pressure on the UK's Prime Minister as the impact of Europe's energy crisis goes global. So good morning, everyone. This is what the picture for the markets is looking at. Now, we had quite a lot of commodity-rich sectors. Now, we're also seeing a little bit of a move when it comes to some of these indices. You can see the Stocks Europe 600 was gaining some 1%. Now it's gaining some 0.4%. Why is that? Now, part of the focus, of course, is on commodities. Commodities not doing badly, which is why we're seeing a lot of the commodity-rich. It's part of the fuel crisis. So I know for us here in the UK, or if you live, for example, in northeastern China, it's difficult because you don't have access, but this is not because there's not that much fuel in the UK. It's just because you can't find the drivers to bring it to the petrol pumps. The DAX was one of the biggest gainers. It's still holding strong, but a little bit less strong than previously. This is because there's coalition talks in Germany, so we got rid of the headwinds with a possible far left party part of the coalition. That doesn't seem to be on the table, but then a lot of questions on how long this coalition building will take. So let's get straight to the groups that are moving the most in today's trading session. For example, energy stocks. So this is a picture that we were telling you about today. You can see it's really energy that's leading the gains, 1.7% higher. Auto parts, insurance. This is not so much part of the reflation trade, but much more about the energy crisis. And then actually there's almost no group on the downside, with telecoms pretty much flat. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Google's YouTube CEO says the internet giant still holds free speech as a core value, speaking to Bloomberg in the company's first public comments since it agreed to a Russian government order to remove material from political opponents. Susan Wojcicki said Google had many things to consider when making decisions on content. YouTube has faced criticism for pulling videos by opposition politician Alexei Navalny.
We certainly get requests from governments, and we look and consider why are we getting the request, what's actually happening on the ground, and based on a whole bunch of different factors, we make a decision. So we don't always, those are not always requests that make sense for us to honor, but in certain cases, we will honor them in that country.
The US Securities and Exchange Commission is delaying enforcement of a rule change some bond traders said could cause big disruptions by preventing dealers from providing certain price quotes. The measure is intended to protect investors from pump and dump schemes, often seen in penny stocks. Previously, the rule hadn't been applied to fixed income, and industry groups say more time is needed to create the framework for a change. China says it's aiming to double geothermal power generation by 2025 compared with 2020 levels. The National Energy Administration is also targeting a further doubling of geothermal capacity in the 10 years after that. It comes as China faces an energy supply crunch, with almost half its 23 provinces missing targets set by Beijing and now under pressure to curb power use. The ride-hailing unit of Geely is in talks with investors for another series of funding after it raised almost $600 million earlier this month. Cao Mobility says the next round may be completed in the first half of next year as it looks to catch up with market leader Didi. Didi controls as much as 80% of China's ride-hailing market, but it was removed from app stores after Beijing ordered it to strengthen data protection. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura. Now, Laura Wright in London. Now, joining us to talk everything about the markets is Noor Alali from our MLive team. Noor, as always, thank you so much for joining us. Now, the question, of course, on MLive, and you can join the debate, is trying to figure out exactly some of the asset classes that are supported or not. What are you looking out for this week, Noor? Is it a question of, is the reflation trade here to stay, or are you looking for central banks, or is it something else?
Honestly, Francine, I am amping up my caffeine intake this week. I'm expecting it to be very busy. We've got Fed speakers this week. I mean, and what a treat, right? This week, I mean, at least today, we've got the doves making an appearance, some of them Williams and Evans, more dovish than hawkish than others. So I expect yields to tick higher. But then tomorrow, you've got Bostic and Bullard, and they're my favorite hawks because they do come out with very intense comments that typically move markets. And then you also have Evergrande's payments due on Wednesday. Of course, now we understand why they weren't able to pay, according to our Bloomberg exclusive last week. And you've also have the German election and, the energy crunch and what that pertains there. So there's a lot happening this week. I'm very excited.
I love the fact that you have favorite hawks. That's just amazing, Nora. I wouldn't expect anything else from you. I mean, would it move? There was a big move actually last week in treasuries. How difficult is it to find out, if a lot of the move will be in equities or treasuries this week?
Well, look, I mean, treasuries and equities last week were moving because of some technical tradings. I mean, you had the 5-year in treasuries that hit the 100-day moving average, and you also have stocks last week also hit the 50-day moving average. So, and I know a lot of people don't like to quote technicals, and they tell you moving averages aren't really their favorite metric, but they do move. Some traders do rely on these technicals to make some put stops there. So realistically, I expect some treasuries to move in reaction to the Fed speakers and then equities to follow through. But obviously, I'm more of a treasuries moves type person than a stocks person because it's 2021 and there is no alternative to stocks. That's at least according to what we've seen from S&P 500.
Yeah, it's so true. Is there anything, Nora, amongst other central banks? I know it's really the ECB that's kind of been left behind in terms of the hawkish stance. Does that help them or does that put them in a corner?
Well, I mean, realistically, it does put them in a corner, but you've got the European Union. It pertains to different metrics. It's a whole set of countries. It's not just one country that they need to worry about when it comes to establishing policy. You've got the semi-peripherals, and you've got you've got the peripherals. You've got Italy, Spain, and Portugal really struggling sometimes to pick up, especially with Italy that was mostly hit with the pandemic. So that pace of purchases may be impacted by the least performing countries versus the best performing ones. Whereas in the US and in the UK, you really have one country that's relevant to their policy making.
Nora, thanks so much. Nora Alali there from our MLive team. Now, coming up, the Evergrande fallout spread. We get the latest from Hong Kong next. This is Bloomberg. Angela Merkel, after 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever, are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
When you went to Harvard Law School, did you say, maybe someday I'll be on the Supreme Court?
Anybody who thinks maybe someday I'll be on the Supreme Court, I don't want to say there's something wrong with him, but there is something wrong.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
We have no exposure to Evergrande, is the short answer. Our own strategy on China for the last several years has been built on building independent credit decisions and credit underwriting.
Evergrande's electric car unit is the latest to admit there's no guarantee it can meet its financial obligations as it continues to look for strategic investors. Now, that is as holders of the developer's dollar bonds say they have yet to be paid for a coupon that was due last week. Now, the company has another $45 million due on its dollar bonds this week. The debt crisis has sent ripples through global markets. Investors close to Beijing are counting on the government to contain the risk, with Chinese stocks recovering from the initial shock. Well, joining us now is Bloomberg's Sofia Orta Acosta. Sofia, thank you so much for being with us today. So how should we look at Evergrande this week?
Hi, good morning, Francine. Yep, as you said, Wednesday, another coupon payment due on a dollar bond. Just crossing the terminal now, Moody's saying the economic costs from Evergrande could be severe, and China will do anything to safeguard stability, financial stability, amid these risks. Now, what's also key for Beijing is these trust products that are sold to wealthy clients and institutions. What we're watching is a report from my colleagues that these products, they're about almost $2 billion that were sold through these trusts to wealthy clients due in the fourth quarter alone, and $4 billion due next year. So we're also watching out for any signs of how Evergrande plans to repay investors. Obviously, a lot of these not repaying this could risk social unrest, and that's the last thing Beijing would want. Francine.
So, Sophia, what do we know about, them wanting to repay it, or actually them saying, well, actually, let's just default on this? I don't know whether, if it's a political decision, do we really know what the Chinese authorities want at this point?
It's really difficult because there's been absolutely no communication. Obviously, that deadline from Friday last week came and went. No communication from Evergrande or from the government in Beijing over what the plans are for Evergrande. This cash situation just keeps getting more difficult. You mentioned the electrical vehicle unit saying that it's not going to list its shares on the Shanghai Star Board, and that was one plan for Evergrande to raise funds. This was Evergrande's most valuable unit this year, as recently as February. This is a company that was more valuable than GM and Ford at the height of its market cap. So, Evergrande is quickly running out of options. That 30-day grace period that was essentially triggered last week on Friday when it didn't repay the coupon that was due on a dollar bond, that's giving at least Evergrande more time to negotiate with bondholders, but silence out of Beijing is not really giving investors much in the way of confidence, Francine.
Sophia, thanks so much for all the insights. Sophia Ortay-Costa joining us on the very latest Evergrande crisis. Now, U.S. Treasury Secretary Janet Yellen and Fed Chair Jay Powell visit Capitol Hill twice to testify before two congressional panels this week. Other central bankers also take center stage on Tuesday at the ECB Forum. We'll hear from the likes of Christine Lagarde, the BOE's Andrew Bailey, the BOJ's Haruhiko Kuroda, and of course, Powell himself. On Wednesday, Japan's ruling coalition will choose a new leader who will almost certainly go on to become the next prime minister. We'll also get latest Chinese PMIs on Thursday, with both the official and unofficial gauges expected to come stronger than last month. Coming up, German stocks surge after the SPD clinches a narrow victory in the election. Coalition talks are poised to drag on. We'll discuss that with Isabel Baruchi, professor at the University of Siegen. This is Bloomberg.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the Open. We're almost 50 minutes into European trading day, and you can see we're still seeing green on the screen. A little bit less maybe than a half an hour ago, but still supporting a lot of these European stocks, a lot of the commodity-rich companies. This is partly because of the fuel shortage that's actually sending a little bit of, I guess, friction in our social democracies, but actually supporting some of the LNG producers. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. UK Prime Minister Boris Johnson is under increasing pressure to ease a supply chain crisis after panic buying at petrol pumps saw fuel stations run dry. The government has now moved to suspend competition rules, allowing rival companies to coordinate fuel supplies. Johnson earlier announced a U-turn on immigration rules for foreign truckers, while his transport secretary left open the prospect of drafting in the army. China's energy crisis is escalating, with electricity supply hit by rising demand and surging coal and gas prices, as well as strict emissions cuts ordered by Beijing. Residents in several northern provinces have already been hit by blackouts, with several industries told to curb activity. According to Nikkei, Apple and Tesla suppliers are among those to have halted production at some factories to meet tighter energy consumption rules. U.S. House Speaker Nancy Pelosi has pledged to pass a $550 billion infrastructure bill this Thursday. Pelosi says she will put the measure forward on Monday. The Senate has already passed the Roads and Bridges bill, but Democrats are divided on the wider package of spending and tax measures. Pelosi says the headline amount that the bill will be lowered from $3.5 trillion.
Let me just say we're going to pass the bill this week. I promised that we would bring the bill to the floor. That was according to the language that those who wanted this to be brought to the floor tomorrow wrote into the rule. We will bring the bill to the floor tomorrow for consideration. But you know, I'm never bringing a bill to the floor that doesn't have the votes.
The U.S. Securities and Exchange Commission is delaying enforcement of a rule change some bond traders said could cause big disruptions by preventing dealers from providing certain price quotes. The measure is intended to protect investors from pump and dump schemes often seen in penny stocks. Previously, the rule hadn't been applied to fixed income, and industry groups say more time is needed to create the framework for a change. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thanks so much. Laura Wright here in London with me. Now, former U.S. Treasury Secretary Larry Summers says the cryptocurrency and blockchain-based payments industry will perform better if properly regulated. Now, his comments follow China's latest move to ban all crypto transactions. Well, Summers also weighed in on Evergrande's troubles, agreeing it's not a Lehman moment, but that investors should be on guard. He spoke to Bloomberg's David Weston on Bloomberg Television's Wall Street Week.
Start from the word crypto. It suggests a desire for secrecy with respect to large financial sums. And when you have large financial sums happening in secret, you have risks of money laundering, risks of supporting various kinds of criminal activities, risks of innocent people being ripped off. The truth is that we wouldn't have a viable airplane industry if we didn't regulate airline safety. We wouldn't have the transportation system we do if we didn't regulate automobile safety. And ultimately, for blockchain-based payments, that industry is going to do better, regulated in a sound way, rather than trying to be some kind of libertarian paradise. And I think the crypto community needs to recognize that and needs to work cooperatively with governments. And if they do that, I think that this innovation can be one of the important innovations of this period. But David, for years I've said this idea that it's going to be some kind of libertarian paradise where we're not going to be able to enforce bank rules like knowing your customer, or where we're going to be able to move money freely and avoid paying taxes, that if that's the basis for crypto, it's going to be the flimsiest of foundations. My best guess is that we'll get through this, but that would be my sense, and I think it's a recognition that all industries need to come to that are systemic in their importance. It's not entirely unlike the discussions of the big tech companies. They need to have a regulatory framework. They don't just need it for the protection of their consumers, they need it for the protection of themselves. we wouldn't have the New York Stock Exchange, as a take another example, as the center of the world's stock markets, if we didn't have a strong SEC. And that's a competitive asset, ultimately, even if people don't like some of the rules some of the time. And I think that's the recognition the crypto community is going to need to come to.
Well, that was a former U.S. Treasury Secretary Larry Summers speaking to David Weston on Wall Street Week, and you can catch the whole conversation online at Bloomberg.com. Now, on to Germany, and Germany's SPD has emerged from the election as the largest party in the Bundestag, a coup for the Social Democrats following the worst performance by their rivals SDU ever. SPD leader Olaf Scholz claimed last night that he had a clear mandate to form the next government.
It's going to be a long election night, that's for sure. But it's also certain that many citizens have voted for the SPD because they want a change of government and because they want the name of the next chancellor to be Olaf Scholz.
We have at this time no certain end results, no certain numbers, but we can say already that we can't be satisfied with the result. Still, the result of this election is as of yet unclear. It will be a long evening. In any case, the result of the election means Germany, the Union, and all democratic parties face big challenges.
The narrow margin for the SPD victory sets the stage for potentially months of wrangling between the two lead parties, the Greens and the FDP. Well, for more on all of this, we're joined by Bloomberg's Maria Tadeo in Berlin. Maria, first of all, I mean, we were discussing the various coalitions as the results broke. How much do we know about the postal vote? When is that coming in, and could it actually change the results, or would it just be a marginal difference?
Yes, you know, Francine, that is a big unknown that we're waiting for this morning. Hopefully in the morning it will give us clarity in terms of which way this polling and the final results will come through. We know that in this year of a pandemic, Germans, many were inclined to not show up to their schools and actually do this on the mail. So again, that's a key factor that could change the result. The one thing I would note, however, is that both parties, the SPD and the CDU, say the changes will likely be minimal, that this is not something that would be a real game changer in terms of the order of parties coming in. The CDU, however, they say that in their calculus, they believe that this is the senior Germans, perhaps the elderly, who felt that I don't want to perhaps put my health at risk, and I want to do this with time on the post and the mail-in ballot, and that could give them a slight itch. Whether that's enough to bridge that difference that we're seeing right now in the polls remains to be seen. But again, the mood music, just to give you some of the new lines coming out of the SPD, is that they're not factoring a big change, and they're still insisting and repeating the fact that we're adding seats and the CDU's losing seats means that we should have the first shot at forming a coalition, and the CDU should go into the opposition. Of course, you would expect that from the SPD, but that's the line that is emerging this morning as we digest some of the results. They still want to go for this coalition talk, and they believe it really comes down to the SPD to trigger the process.
Maria, thanks so much. Maria Tadeo there in Berlin. You can get all the latest news and analysis from our team. Just go on to TLIV on your Bloomberg terminal. That's TLive blog. Now, that's it for the European Market Open Surveillance. Early edition is up next. I know we have some great guests for you coming up. We'll talk about international finance with Tim Adams. We'll also talk a lot more about the German elections. And then all of this, of course, as a market holding up pretty strong. You can see the Stocks Europe 600 gaining some 0.4%. This is Bloomberg. you look at China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
Oil prices are up since your Concho deal, but some are saying that that is too high of a price. Maybe you paid a little bit too much. How did you come to the right valuation?
That's what's great about our cost of supply framework inside our company, because it's agnostic to price. So to fit our framework, Alex, the all-in cost of supply needs to be below $50 a barrel WTI.
Many citizens have voted for the SPD because they want a change of government.
We have at this time no certain end results, no certain numbers, but we can say already that we can't be satisfied with the result.
We wanted more, but we didn't achieve it. This was also due to my own mistakes at the beginning of the campaign.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Olaf Scholz and his Social Democrats secure a narrow win against the governing CDU. Now, the SPD leader says a so-called traffic light coalition is possible. Long queues outside British petrol stations. The UK government considers drafting the army to get fuel. The energy crisis goes global. And Evergrande fallout spreads while wealthy investors join thousands of Chinese households demanding their money back. So we do have our work cut out for us this week. There's quite a lot going on. And then we have a little bit later in the week also the ECB forum. This is what the markets are looking at today. So we did start strong, actually, an hour ago with the European stocks 100 gaining some 0.8%. So it does seem like we're holding on to gains, but not as much as before. Amongst the biggest gainers, we still have a lot of the commodity rich. Again, for example, if you look at the energy crisis here in the UK, it's not a problem of not having fuel. The problem is of getting the fuel to the petrol stations. So it is supportive of some of the commodity companies. That's supportive, for example, on the FTSE. You can see Brent crude at 78.88. And then overall, the DAX. We need to talk about the DAX because we spent 2 hours yesterday live on Bloomberg TV on the Sunday looking at the election results. It seems that there are a number of ways that the coalition could do, but the markets are actually taking in their stride because there's not a far left and actually, component of this possible coalition. And also it was kind of priced in that it would take a couple of months to go through everything. So the map in Europe, I don't know whether there's a huge difference between what we're seeing, for example, in the FTSE or the DAX, but you can see the DAX gained some 0.9%, the UK 0.3%, and overall, if you look at the industry groups that are moving the most, it's definitely energy stocks at the highest, with technology stocks as well. So Olaf Scholz and his Social Democrats inch ahead in the CDU, or inch ahead of the CDU in an unprecedentedly tight German election. Though these preliminary results suggest there will be months of government-building talks, the leader of the SPD has, in the past hours, said that a so-called traffic light coalition is possible. For more, we're joined by Bloomberg's Maria Tadeo in Berlin. So, Maria, it's unclear who has a candidate, or the mandate, but it does seem that actually Olaf Scholz, because he's done better than the CDU, could have the upper hand.
Yes, and Francine, you know, that's a message that is coming out of the SPD in the past hour. Again, repeating this line that the winner is Olaf Scholz. So this was a big turnaround for the Social Democrats, that they have won the election. And the fact that they've added seats and the CDU has lost seats, it's a very clear signal from the German population that they should now go into the opposition. And the SPD wants to trigger the process to kickstart those talks with the other parties. Now, again, this takes us to a traffic light coalition. The only issue, of course, here is that the vote is very tight. And for Armin Laschet, he knows in his political calculus that right now he has two options. He either forms a government, or he will or could likely be out of the CDU after that election result yesterday, which was the worst for the union since the Second World War. So he will fight to try to make this happen. Just very quickly, I know that you referred to the market reaction. What's also being very much priced in and factored in this morning is that it's now clear, based on this preliminary results, that this red scare, this far to the left government coalition, it's not going to happen. So essentially you're looking at two very centrist options going forward. It's either the traffic lights or the Jamaica, but both of them see a very mainstream pro-European party leading a government. So again, it would seem like a very messy scenario happening in Germany, but ultimately you're looking at two very centrist politicians trying to form a government.
All right, Maria, thank you so much, Maria Tadeo there in Berlin for us. Now, we're joined by Eric Nielsen, Group Chief Economist at UniCredit, who also knows intimately Berlin and, of course, Germany. Eric, as always, thank you so much for joining us. I mean, it's unclear to me. I know there's a clear win for the SPD, or at least they haven't lost votes like the CDU have. But if you're the Liberals and if you're the Greens, because the CDU, you know, could be more desperate, certainly Armin Laschet has his last chance to actually strike a government, would you not negotiate with them first because they're willing to give you more leeway?
Yeah, Francine, that's a possibility. As we heard yesterday, Lindner from FDP invited the Greens to start to make an agreement between those two parties and to become the true kingmakers. Laschet, however, you're right, in exactly as you said. I think he has this problem that he would probably like to give almost anything away, because, as your colleague said, if he doesn't become chancellor, he's out of Berlin for sure, and may go back to Aachen, but certainly he's out of national policy. But he has a right wing of the CDU that he also has to appease. So you could imagine that whatever he agrees will then have to be sent out for votes to the members of the CDU, which is more to the right than he is. And maybe they would then turn him down. So he has two sides to this, right?
So, Eric, when you look at, you know, coalitions have been tried to be built in the past. Are we absolutely certain that actually the FDP, the Liberals, and the Greens want to go into power?
Yeah, I think they all want to go into power. The question is whether they overplay their hand. I mean, I saw one commentary say that if they overplay their power, maybe you get another grand coalition now with the Social Democrats at the Chancellery. I think that we'll be well into next year before we could get to that possibility. So I think it's a pretty given that we are going to get one of those 2-3 party coalitions. And I still think, as I wrote a week ago, that the odds are that it's going to be the traffic light under Olaf Scholz, but who knows, right, at this time.
Eric, what's your bet on what it means for the energy transition? What does it mean for example, real estate in Germany? I mean, there's also an election in Berlin that happened yesterday.
Yeah, this is very important stuff. I think the Greens would have to get money for the green transition, right? It is and FDP has to give in on some of that. There is this issue that they may do it through extra budgetary funds, which is a mess. And I would say that the Greens have been the only ones saying we should change the constitution so we can actually run a deficit to finance this part. The other very important aspect, Francine, is of course with regard to Europe, where this is going to take a long time, and how they would address that specific issue on how to finance it will translate straight into the issue of the fiscal rules in Europe, which is having a bigger impact, I suspect, into next year. So a lot is at stake in who sort of gets the upper hand in these negotiations in the coming few months.
So, Eric, we have, 2-3 months of possible coalition building, or could it come any sooner? And what happens to the economy in those 2-3 months? Is it a big vacuum, or does it actually make not much of a difference?
No, it doesn't make so much of a difference. Angela Merkel stays on until the coalition is in place. And the calendar, as I understand it, is full. Life goes on. But of course, you don't get any big initiatives and no big agreements on things in Europe, for example, the fiscal rules. So that's sort of the price we have to pay. My guess is it's going to be Christmas and maybe even into winter before we get an agreement. This is really tight and complicated, but it would be nice if we get a surprise in a government one way or the other before Christmas, but I cannot doubt it.
Eric, what are the key issues that actually, the FDP or the Greens will want? I know we've heard, for example, that the FDP definitely want to put their leader as finance minister. What does that mean for the deficit and also further European integration?
Yeah, that's I think from the market's point of view is the key question. But first, remember that in Germany, when you have a coalition, you have a very detailed coalition agreement, and that's what takes so long to negotiate. So the fiscal policy and the issue of the debt and the financing of the green transition will be written into this. So in that sense, the finance minister position becomes a little bit less important than people sometimes think. But as time then goes by, of course, the bureaucracy and the power of the finance ministry comes in. And there are the two key candidates, obviously, are Lindner, as you said, from FDP, who badly wants it, and it's Robert Habeck, the co-head of the Green Party. For those believing in the need to finance this transition, I think in the market, people are probably leaning to hoping for Robert Habeck winning. But again, the finance minister position, because it's certainly outside Germany, I can speak for investors, there is a great skepticism to this Schwarze Null, the no debt financier Lindner, and part of CDU stands for. But we'll see.
Eric, thank you so much. Eric Nielsen there from UniCredit, who stays with us. Now, coming up, Europe's energy crisis starts to spread to the rest of the world. We discuss its impact on the global economic recovery next. If you have any questions, you can send them IB plus TVGo or tweet me at Flacqua. This is Bloomberg.
About your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just two girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
From New York City.
We're here in London,
in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now let's get straight to the Bloomberg. First word news, here's Laura Wright. Hi, Laura.
Hi, Francine. U.S. House Speaker Nancy Pelosi has pledged to pass a $550 billion infrastructure bill this Thursday. Pelosi says she will put the measure forward on Monday. The Senate has already passed the Roads and Bridges bill, but Democrats are divided on a wider package of spending and tax measures. Pelosi says the headline amount that the bill will be lowered from $3.5 trillion.
Let me just say we're going to pass the bill this week. I promised that we would bring the bill to the floor. That was according to the language that those who wanted this to be brought to the floor tomorrow wrote into the rule. We will bring the bill to the floor tomorrow for consideration. But you know, I'm never bringing a bill to the floor that doesn't have the votes.
The U.S. Securities and Exchange Commission is delaying enforcement of a rule change some bond traders said could cause big disruptions by preventing dealers from providing certain price quotes. The measure is intended to protect investors from pump and dump schemes often seen in penny stocks. Previously, the rule had not been applied to fixed income, and industry groups say more time is needed to create a framework for the change. China says it's aiming to double geothermal power generation by 2025 compared with 2020 levels. The National Energy Administration is also targeting a further doubling of geothermal capacity in the 10 years after that. It comes as China faces an energy supply crunch, with almost half its 23 provinces missing targets set by Beijing and now under pressure to curb power use. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Laura Wright. Now, we're just getting some breaking news out of cryptocurrencies. This was on the back, of course, of, unrelated, but actually China last week really cracked down on cryptocurrencies. And now just the latest headline, crossing the Bloomberg terminal is on Robinhood, experienced some issues with crypto trading. Now, this is something that we need to keep an eye on because, of course, if it stays on, it would have an ability to, false the market if you can't trade properly. Unclear why exactly this is happening right now, so we'll just reach out to Robinhood as we're trying to already to understand how long this would last. Now, Europe's energy crisis deepens. The UK government is taking emergency measures to ease fuel shortages across the country. In Asia, China ramps up gas imports, adding to global price pressures. So what impact will this have on the global economic recovery? Well, Eric Nielsen from UniCredit is still with us. Eric, thank you so much for sticking around. It's unclear actually how long this fuel shortage lasts, and it's not only the UK for a number of reasons. There's also fuel shortage in Northeast China and other parts of the world, and whether it gets better but then it gets worse. Like, how do you see it developing?
It's a very difficult one to call. One thing is very clear to me. It's bottlenecks of various types. Some of them probably politically driven, like the gas crisis in Europe or emerging gas crisis in Europe because of Russia, related probably to Nord Stream 2. In Britain, of course, we have the additional issues of truck drivers because of Brexit and the pandemic and the rest of it. So there are a lot of different issues around the world as far as I can judge, but none of them are sort of systemic, fundamental ones. So I would think that we get some further noise, but then things start to clear up.
Eric, is this inflationary, or is it the kind of temporary inflation that central banks talk about?
It's a very good question. It is, if I'm right, it is temporary, but almost certainly it is temporary. Think about it this way. If you get an oil price shock or energy price shock, and prices go up by X%, in a year that has washed through, right? And the important thing when you talk about monetary policy is that for Europe and for Britain and for most of the Western world, this is like a tax on businesses and consumers outright. You have to pay more for imported input into your production. And central banks should not tighten to curb that inflation, partly because it's temporary, as I said, but also you will just add additional restraint on the economy by doing so.
So, Eric, who does this benefit, if anyone? Are there, is there a faction of the industry? Does it actually help with the change to renewables, or not so much?
It's a good question, right? It is sort of, you could say it's a sort of zero-sum game. Those who have the energy in the storages or in the ground stand to benefit, but also a lot of those distributors and that you have. Typically, what you see when prices go up in these type of supply crises is the margins go up for a while, and obviously the obvious losers are consumers and all the businesses which take as a net input the energy side. So relative moves could be quite substantially, but hopefully temporary.
Eric, I know there was a big move in treasuries and actually in all asset classes last week. I mean, what do you need to know today from central banks to have a better understanding maybe on whether the reflation trade, or just in general, whether the recovery is here to stay and strong enough to sustain the kind of valuations that we've seen?
Yeah, this is a very interesting question. I'm not sure I exactly know where we're going right now, but what is very clear is that from late August, we had the first high-income country hike interest rates in South Korea. Then last week, we had Norway. We got more noise about possible rate hikes out of the Bank of England, maybe even November, but more likely after New Year. The Fed has said they will taper, and they will taper a little bit faster than we thought. The ECB says we think inflation is temporary and we are not going to withdraw monetary stimulus. Yet we know that there's huge political pressure inside the Governing Council to end the PEP, the pandemic facility. And I don't think there's any real reason to think they can substitute it with other measures. So they probably also stand to withdraw some stimulus. So it is a little bit like central banks around the world are looking at growth rates, are not so worried that GDP levels are not quite up where they should be. And some of them are worried about the inflation, that people like me could be wrong, that this is a longer lasting inflation. They start to take out some insurance policy against it by starting to withdraw some stimulus. So, and it's not particularly coordinated. So as I wrote on Sunday or yesterday, I wonder why euro dollar is not going weaker, but it hasn't so far.
Yeah. Eric, thank you so much. Eric Nielsen, the Group Chief Economist at UniCredit, joining us today on a number of themes. Now, coming up, Evergrande's debt crisis is rippling through global markets. We discuss the latest next. This is Bloomberg.
U.S. Open tennis champion Emma Raducanu's 3 dream dinner guests.
Daniel Ricciardo, Michael Jordan, and then Tom Keane from Bloomberg.
She understands you.
Funny and very understandable.
I am reading in on tennis like nobody.
Yeah. Champion approved Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Evergrande's electric car unit is the latest to admit there's no guarantee it can meet its financial obligations. That is as holders of the developer's dollar bond say they have yet to be paid for a coupon that was due last week. Well, joining us now is Bloomberg's China debt reporter, Rebecca Chung-Wilkins. Rebecca, thank you for joining us. So what exactly is happening in China's credit markets today?
Well, the broader credit markets here still feel really jittery today. Kind of the broader high-yield market is down about 1 cent on the dollar, and some of these weaker rated names and names like Sunak and Fantasia also kind of under pressure today. And you know, just to put that in broader context, we're already at yields between 14 and 15%, which is incredibly high for this part of the market.
So what's next for Evergrande's bond payments?
Well, of course, as you say, we still have bondholders awaiting the coupon that was due later last week. And then again this week, we have another $45 million due Wednesday on a dollar bond. And then in October, we have 4 more bond coupons due. So it is a really big month for Evergrande. Investors are looking at this very, very closely, waiting for clarity on any kind of potential restructure or what's going to happen with these upcoming payments.
Rebecca, thank you so much. Rebecca Chung-Wilkins there with the very latest, of course, on Evergrande. Now, coming up, German stocks surge after the SPD clinches a narrow victory in the election. Coalition talks are poised to drag on. So we'll discuss that next with Isabel Baruchi, the professor at the University of Siegen. And again, mathematically, there are only 2 or 3 ways a coalition would go. So we'll dig deep into exactly who could become finance minister, what the consequences of that for the debt deal are, and of course, some of the other things, including what that means for further Europe integration. Now, I'll look at also the markets. The markets are holding strong, but not as strong as before. If you look at the European stocks, 600, they're getting some 0.3%. Again, the focus is on fuel shortages, and also markets don't really 100% know how to read the China question. So China, Evergrande, and everything in between. We'll have the latest on the markets shortly. This is Bloomberg.
We didn't want our story to be ended by Taliban. We wanted to continue the path that we started, to continue to go for our achievements and to go for having our dreams to reality. So that's why we decided to leave Afghanistan and go for somewhere safe. We are concerned that what will happen to our home then. Many people are leaving, but there are still girls who have dreams. There are still people who have dreams, and we want countries around the world to help Afghanistan to have peace over there, so that the girls over there can have the opportunities to continue their path as well.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Olaf Scholz and his Social Democrats secure a narrow win against the governing CDU, but Germany could see months of coalition talks. Long queues outside British petrol stations. Now, the UK government considers drafting the army to get fuel. The energy crisis goes global. And Evergrande fallout spreads while wealthy investors join thousands of Chinese households demanding their money back. Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. So Germany's SPD narrowly wins the German election after an incredibly tight race with the CDU. That's according to provisional results. Now, with no clear majority, the decision is yet to be made of who will lead Europe's biggest economy. Well, we heard from both candidates after the exit polls.
It's going to be a long election night, that's for sure. But it's also certain that many citizens have voted for the SPD because they want a change of government and because they want the name of the next chancellor to be Olaf Scholz.
We have at this time no certain end results, no certain numbers, but we can say already that we can't be satisfied with the result. Still, the result of this election is as of yet unclear. It will be a long evening. In any case, the result of the election means Germany, the Union, and all democratic parties face big challenges.
Now, for more, we're joined by Bloomberg's Chad Thomas in Berlin, who helped us, of course, with our coverage last night as well. Chad, if you look at who has a mandate, so both the CDU and the SPD say they could form a government. So I guess the question is, who do the Greens and FDP want to go in government with?
Well, that absolutely is the question, Francine, and that is what we're going to be trying to find out today. Armin Laschet was talking about the long election evening. Now we're in for a very long day afterward, and ultimately probably weeks and months to come. Really, it's up to the FDP and Greens at this point whom they want to get into a coalition with. I think one of the interesting things to come out of last night is that the FDP and Greens said that they will speak with one another before they talk to the SPD or the CDU. So it sounds like they're going to try and sort of square some of the circles that they are facing with one another in terms of their policy differences and try to get the best deal they can from whomever they end up in a coalition with. So we'll be watching very closely today the press conferences from all of the parties to hear from them whom they will start some of these initial talks with, as you and I were discussing last night. Now we're into the speed dating where everybody has those initial conversations with one another before moving forward into the more formal talks down the road.
Chad, thank you so much. I know we talk about speed dating, but actually coalition talks could also last a couple of months. So it's a speed long dating. Chad Thomas there with the very latest from Berlin. Now we're joined by Tim Adams, Chief Executive of the Institute of International Finance, to talk about the main challenges, not only, of course, involving international finance, but the world economy. Tim, first of all, thank you so much for coming into the studio. I mean,
it's great to be back, Francine. It's great to see you in person. You look fabulous. Thank you.
You're traveling, which means that actually things are getting a little bit better.
And I'm ready.
We have the German election. The results are unclear because they're still trying to coalition build.
Right.
But with Angela Merkel left, what does it mean for the state of Europe and how Europe actually interacts with the U.S.?
Sure, well, it's going to take some time to figure out what this coalition, whatever it looks, traffic light or Jamaica, whatever, it's going to take months. I think there's some good news. One is that young people and voters turned out en masse, so they believe in democracy. Two, something about centrist continuity I think is very important. The Greens won big, and I think that tells us about the future. We're all going to go green over time. And I think it also tells us that Europe, there is a vote for Europe, and I think there's a vote for the transatlantic relationship.
Damon, if you look at some of the major changes over the next 2 to 3 months to a couple of years, is it Europe trying to find its place between the U.S. and China? And actually, what does it mean for the banking sector? What does it mean for the kind of recovery we could see?
Sure, of course, we have elections in France, so obviously that's huge. And post-Brexit, Europe is trying to figure out its way. They'd hoped that maybe a Biden administration had given them different signals in China, but there's more continuity vis-a-vis China than anyone expected. So yes, it's trying to find a middle way between the U.S. and China. That's hard. And the Chinese make it harder, and the U.S. makes it harder.
I know you put some, fabulous events on, usually at the margins of the IMF or some of these big thinkers that you are able to attract and speak to almost on a weekly basis. What are they asking, or what are some of the concerns that they have in this post-pandemic world?
Sure, it is about the U.S.-China relationship, and how do we find our way through without it being a new Cold War? I don't like that phrase because I don't think that's accurate, but we need to find a way to work together on climate change. You can't solve climate change without the U.S. and China at the table working collaboratively. So I think that is a huge relationship. U.S. relationship with Europe going forward, the future of the U.K. and Brexit. And then central banking. What's the world going to look like when easy money dissipates and we're back to something that looks like normal? What about zombie companies, and how do we think about growth going forward?
Yeah, and zombie company actually is something that I know a lot of the financial institutions have tried to do work on. I think there was also a piece signed by Mario Draghi before he became prime minister. Are we doing enough work to try and understand actually, when this cheap money goes away, what we're left with?
Indeed, I think what we're going to find that there's a lot of companies that probably can't survive. And actually, from a productivity standpoint, washing out some of the low producers probably is helpful. If you're working for those companies, it's not helpful. So there is a societal aspect, but ultimately I think it's good for growth.
Okay, where are we on the banking union? I don't know whether we'll ever get anything in our lifetime at this point.
Francie, we've been talking about banking union for a long, long time. I think we've been talking about it for a long time. We need it. We need consolidation across Europe. We need efficiency in the system. We need the application of new technologies. We need to spend billions in new technologies, and we need to finance this green transition to a low carbon and ultimately net zero carbon world. That's going to take a very vibrant banking system and capital markets. We need it. We need it soon.
Yeah, we certainly need it soon. So maybe you'll go to Brussels and remind everyone that actually it should be something on their priority list. I don't know how we deal with China at this point. So it's unclear exactly what happens to those dollar bond payments. Unclear exactly what the end game of China with international investors is.
Right. I think on Evergrande, it's a particular case. Obviously, the sector is under stress. But Beijing has been signaling for some time they want to take some froth out of the property sector. The problem is the property sector is a third of GDP. So there's going to be a hit to growth. We've become pretty bearish in the near-term Chinese outlook. But I think ultimately it's about taking leverage out of the system to make the system more stable and safer over the medium term.
Do you think they'll send a signal? And I don't know whether Evergrande, because of the sheer mass of it, is the right way of looking at a possible signal from China. If they want to let steam out, is there anything that could be, in default soon?
Oh, I think there's a signal that you should listen to Beijing when they tell you not to leverage up. So they can make an example out of them. I think ultimately those who bought houses and had advance payments, I think the suppliers and maybe the foreign bondholders will end up being saved. Domestic bondholders, domestic equity holders, doubtful.
Tim, overall, what kind of recovery are we going to see? Is it a two-speed, and we're talking about booster shots in the U.S.? I know you have, you're always a big thinker in these kind of things. What does it mean, again, for institutions and central banks? Are we really going to create this world of 2, 3, even 4 different speeds?
It is multiple speeds, and it's also the service sector versus the goods sector. We had hoped the service sector would be back, more robust now, but because of the Delta variant, that hasn't happened. Hopefully it will next year. And the goods sector is hampered by the supply chain problems. The ports on the West Coast in California, 60-70%. There's container ships lined up out in the ports, no truckers, no warehousing, and then obviously the challenges here in the UK about just getting petrol. So it's a supply side challenge, really globally.
Yes, did we actually misread the supply chain challenges during the Trump era? There was a belief in the markets that actually, because President Trump was very tough on China, that those supply chains have moved and we'd be fine no matter what.
Right. Well, I think what we're learning, one is that suppliers respond to price signals and prices are going up, so suppliers. Right. But there's just these logistical bottlenecks. I don't think we really understood. For example, drivers here in the UK, you need drivers to get petrol to the stations. They didn't have them. Some of that's because of Brexit. But we need to focus more on the supply side.
Tim, cryptocurrency. Yeah. I mean, everybody has a view on cryptocurrency, and half the people love it, and half the people actually hate it and thinks it should be regulated.
Yes, it's going to be regulated. We've seen Gary Gensler, who I think is going to be the most profound SEC chairman probably in a generation. We've seen the Chinese. Anyone in the crypto era who thought that it was going to escape regulatory scrutiny, that was going to be this utopic libertarian world, I think is in for a harsh surprise. It's going to be regulated. It's going to be regulated pretty soon.
So what are you expecting from Gary Gensler? Again, a lot of our international, viewers read about him, but probably don't know him as well as you. Is he dogmatic? Is it just more regulation, but smart regulation, or is there a danger that there's over-regulation?
Well, he's incredibly smart. He knows this area. He used to teach a class on Bitcoin at MIT, so he knows the topic. He's been given a great remit to actually take sweeping changes. There is a chance for overreaction because there's a question about their capacity to regulate some of these and the legal definition of some of these assets. So probably overreaction early, and then they'll sort it out later. But regulation is coming.
U.S. debt ceiling. Should we worry about it? I feel like, in my lifetime as a reporter, I've had to deal with it many times, and it always sorts itself out.
Yes.
What is the time? I mean, is it the same this time?
It's like the perils of Pauline. They get her off the tracks just in time for the train comes. I think this is similar to it. I think we're going to see some sweeping policy changes this week. Of an infrastructure bill, which will be passed, a larger bill, which still is in question. But I think we'll escape government shutdown, and I think we'll get an extension of the debt ceiling.
Tim, what does international finance need, apart from clearer rules and I guess the same rules across the board?
We need shots in arms. We need to get vaccines out, and we need to get back to normal. That's why I'm here, is a message of normality.
Tim, thank you so much for joining us on set today. Tim Adams, there is Chief Executive of the Institute of International Finance, with some great insight and thoughts. Up next, panic at the petrol pumps, fuel shortages pile pressure on the UK government. The impact of Europe's energy crisis starts to spread to the rest of the world. We'll have a full roundup of what this means for everyone. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hey, Francine. Google's YouTube CEO says the internet giant still holds free speech as a core value. Speaking to Bloomberg in the company's first public comment since it agreed to a Russian government order to remove material from political opponents, Susan Wojcicki said Google had many things to consider when making decisions on content. YouTube has faced criticism for pulling videos by opposition politician Alexei Navalny.
We certainly get requests from governments, and we look and consider why are we getting the request, what's actually happening on the ground, and based on a whole bunch of different factors, we make a decision. So we don't always, those are not always requests that make sense for us to honor, but in certain cases, we will honor them in that country.
The ride-hailing unit of Geely is in talks with investors for another series of funding after it raised almost $600 million earlier this month. Cao Mobility says the next round may be completed in the first half of next year as it looks to catch up with market leader Didi. Didi controls as much as 80% of China's ride-hailing market, but it was removed from app stores after Beijing ordered it to strengthen data protection. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura. Now, Britain's pumps ran dry over the weekend after a supply chain crisis prompted panic buying of gasoline. Here you can see the long queues outside UK petrol stations, while the fuel shortage is also dominating headlines this morning. The Times leads with the headline, Army will be sent in to tackle the crisis. Similar headline on The Guardian, petrol crisis, the PM to rule on using Army to deliver fuel, and the Mirror with the simple heading shambles. Let's get the latest now of the intensifying energy crisis. Here in the UK, the government taking emergency measures to try to ease these fuel shortages across the country as gasoline retailers shut pumps after days of panic buying. Well, joining us now is Alaric Nightingale. He leads, of course, Bloomberg's European oil markets team. Alaric, thank you so much for joining us. I mean, this is an absolute mess, right? You can call it shambles, you can call it whatever you want, but how does the Prime Minister sort this?
Well, the measures that he's trying to take are to bring in the army potentially, the easing the visas for overseas workers. Those are difficult solutions. They're not something that's just going to be a magic wand, because who wants to come to the UK? I mean, I'm not saying that they don't, but it's not everybody's choice, and they've got jobs. So it's a competitive market. Europe has its own challenges in terms of drivers. So those issues are there. I think that one of the solutions will simply be that there is no shortage in the country of fuel, so eventually there's going to have to be a normalisation of demand at the pump. That will come at some point. People will fill up. They won't have to keep filling up. And so you'll see a calming down and resupply at some of the stations. But equally, you have a concertina effect in terms of the supply chain now, because suddenly there was a shortage of drivers, and they're not where they were expected to be.
I mean, I think there's a shortage of like 100,000 drivers, and I think the government is looking at maybe, giving 5,000 some visas. So I'm not sure, again, if the numbers square up. We have a viewer question. It's a good question on the energy transition. Remember, to everyone, you can just send them to us on IB Plus TV Go. So this person's writing in, Alaric, and it says, if the transition is pushed even more aggressively, the energy transition, and fossil fuel supplies fall prematurely, wouldn't Europe and the world face an even worse energy crisis? I mean, is this a misnomer, because actually the problem is the drivers and not the actual fuel?
I would agree with that. That there is clearly it's not a fuel supply issue, but it's still an interesting question to explore, because if you do take fossil fuels away too quickly, and there isn't the replacement fuel supply, sure, that's an issue, and so you have to make careful plans and make sure that you're mapping your supply of electricity and alternatives to future demand patterns, and you can't have shortfalls. And as we've seen with the wider energy crisis, if you have renewables, you have to make sure that you have a reliable supply. So in the wider sense, the energy crisis is that's a valid question.
So, Alaric, I mean, I was talking about energy security 10 years ago on Bloomberg TV. Is the government, why has the government not taken this so seriously?
I don't know that it hasn't taken it seriously. I think it's just, these are evolving demand patterns, and it's harder to, judge renewables and, exactly how the different demand patterns are going to play out. So, also we had the virus, which created a very significant shift in demand patterns. And, maybe they've just, got a few things wrong.
All right, Alaric, thanks so much. Alaric Nightingale there of Bloomberg. Coming up, a rule revamp on pause. The SEC is giving a 3-month extension to a new rule that could upend bond trading. More on that next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We have no exposure to Evergrande, is the short answer. Our own strategy on China for the last several years has been built on building independent credit decisions and credit underwriting.
Well, that was DBS Chief Executive Piyush Gupta on Evergrande risks. Now, let's check in on the markets. And actually, we're seeing quite a lift-off for the markets, but not as much as they were lifting off just about an hour ago. So we started the day on a high on the trading platform. If you look at some of the, narratives that are out there, first of all, Germany leads a pretty upbeat European stocks after the elections. This is because we definitely got rid of some of the tailwinds that the markets were worried about, which was the far left coming in with too much regulation. European stocks in general, on the up, but investors still trying to assess whether global growth can withstand a slowdown in China and this global energy crunch that we have extra reporting on. Now, a pause for new rules for the bond market. The U.S. SEC is giving debt markets at least 3 more months to prepare for a rule revision that insiders say would upend trading for some debt securities. After a small uproar from bond dealers, the SEC announced that the rule won't be enforced for fixed income securities until January. Well, joining us now is Bloomberg's finance managing editor for EMEA, Michael Moore. Mike, thank you so much for joining us. How significant is this?
Well, I think it avoids a bit of panic and chaos for now. I think, you know, the SEC and market participants, everyone seems on board that the tweak to this rule, which happened a little while back, was aimed at penny stocks, you know, was aimed at equities. But bonds were not exempt from this rule change. And that's why you're seeing a pause here to give regulators and market participants a chance to take some time and figure out where the exemption should be and how this, you know, how this plays out in the bond markets, because nobody was ready for it to take effect now.
So, Mike, what do we know about the SEC and actually what they want to regulate and what they're looking at, how aggressive actually they could be on this?
So I think the intention here was to better regulate, you know, some of the pump and dump schemes that we've seen in thinly traded equities, in the penny stocks, as they're called. So that's what they're going after, and they're trying to put the onus on some of the, you know, on the broker dealers to, you know, rein in the quotes that are put up on those securities, but because debt was not exempted from this, you know, you have ripple effects in the junk bond markets, in mortgage-backed securities, where there's less transparency, but you have more institutional players, more knowledgeable buyers.
So, Mike, what does it mean, you know, concretely, when the U.S. opens today? What does it actually mean?
It's business as normal for now. I think the big question is, you know, January is not too far away. How do the, you know, SIFMA and the regulators come to terms over the next few months into how this should actually be enforced on the bond markets? Do they go kind of asset class by asset class? Do they make a broad exemption? Or is this something that broker-dealers really have to get prepared for?
Wonderful. Thank you so much for joining us, Bloomberg's finance managing editor for EMEA, Michael Moore. Now, in the meantime, let's also do a quick market check as we look at the German results. We're also looking at live pictures from Die Linke. This is a far-left party that didn't do as well as the polls were suggesting. So I don't know whether they regroup today, but certainly I don't think they have that 5% threshold, which means that they don't get to make it to the Bundestag. European stocks, U.S. futures rising, investors assessing global growth and whether it can withstand a slowdown in China and a global energy crunch. So coming up next, we'll talk a lot more about energy and what it means for fuel concerns. Also, China's Evergrande. The debt crisis keeps on festering. The data due this week may actually show a manufacturing recovery in the world's second largest economy is faltering. Also, on this developing energy crisis, look, it's threatening to crimp global growth further at a real time where markets are also preparing for a tapering of Fed stimulus. So it's going to be a busy week. It's going to be an interesting and very nuanced week ahead as well. Bloomberg Surveillance Early Edition continues in the next hour. Danny Berger joins me out of London. Kaylee Lyons will be in New York. This is Bloomberg.
Electricity subscriptions, it's a part of this new business area that we have called the clean energy services. So the purpose for this new business area is to contribute and to create this biggest movement in the world for renewable energy. We will add even more products. We have solar panels that we sell, and now we have soon I should say, the electricity subscription. So it really fits that ambition that we have to, within the frame of life at home, the most important place in the world, we can add more value to our customers to live more sustainably. And this is a big part of the climate positive strategy that IKEA has for 2030, that we will remove and reduce climate emissions more than we emit in our entire value chain.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
When you went to Harvard Law School, did you say, maybe someday I'll be on the Supreme Court?
Anybody who thinks maybe someday I'll be on the Supreme Court, I don't want to say there's something wrong with him, but there is something wrong.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
The tail risk of a red, green, red government has been taken off the table. That is excellent news for the German economy.
The question of a mandate, what the German voters really were telling us last night, is a big one.
I think what the market is looking for is what you just indicated, a relatively long period of talks going on, taking potentially weeks or months.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, it's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, September 27th. Our top stories today. Germany in limbo. The Social Democrats turned back Angela Merkel's Conservatives in an extremely close election. Now there could be months of negotiations to form a coalition. Showdown on Capitol Hill. A vote this week on President Biden's infrastructure bill is a crucial test for House Democrats. And the energy crisis goes global. It's not just Europe. This winter, millions of people will feel the impact of soaring natural gas prices. Well, good morning, everyone. I'm Francine Lacqua with Danny Berger in London. Kelly Lines is in New York. Matt Miller off this week. Kaylee, if we look at the markets, they're pretty much supported. I mean, questions over China, questions over the energy crisis, but actually that tailwind that could have been, happening in Germany off the table for now.
Yeah, it's a very different story when you look at what's happening in Europe versus what is happening in China. But in many ways, it also is the same, Francine, in that China now is dealing with a potential power crunch of its own. All that said, in the Asian session overnight, we didn't see much dramatic movement. We were essentially flat on the Nikkei in Japan, flat on the Hang Seng as well, though we did see stocks rising about 0.6% in China. Of course, you had the PBOC injecting another $15 billion worth of short-term liquidity into the market. But at the same time, fears around that power crunch actually led to growth forecast downgrades from Nomura and Morgan Stanley. So that fear around what the potential energy crunch could mean for factory production weighed most heavily on materials stocks. The CSI Materials Index actually falling the better part of 4% in the overnight session. And of course, layer on top of that, ongoing fears around China Evergrande and the crackdown on the property sector. And that has now spread to Sunac China, which is another property developer. Its bonds fell and its shares fell about 9.4% after it had to ask local government for help. In other asset classes, I would point to iron ore continuing its rebound. Futures up about 8% in the overnight session. We're back around $120. And you also had the Philippine peso underperforming in Asian FX, actually at its weakest against the dollar since all the way back in March of 2020, after an official from the central bank said that he expects the currency to continue to depreciate. Now, here in the U.S., we are coming off a weekly gain for equities, and it does look like those gains will continue on this Monday morning. Futures up about 0.3% when it comes to S&P E-minis. You are starting to see yields moving even higher in the bond market, up 2 basis points on the 10-year Treasury yield. We're at 147 at the moment. And then I would just point to what's going on elsewhere in the commodity complex. WTI crude right around $75 a barrel, and the Bloomberg Commodity Index standing higher again today, up about 0.75%. It is at its highest since going back to July of 2015.
Yeah, those two things combined, commodities plus energy, is doing a lot of legwork when it comes to this European session. We're just seeing green basically in every single region. It is the energy stocks that are outperforming. But Fran, you mentioned this before. It is a rare treat when politics actually moves the market. It's quite different from the U.S. when a lot of that stagnation in terms of movement of politics doesn't do too much. DAX up about 1% today. Clearly the outperformer. There was a tail risk that we could get a far left coalition that has now been removed. You also have hopes for renewable stocks outperforming, with the Greens doing very well in the election as well. So those type of stocks doing well. But as I was saying, it's all about energy today. It is all about the UK shortage of energy, the European in general crisis. So we're seeing right now energy stocks at their highest since March of this year, up more than 2%. So that's definitely giving a lift to the broader market. Now you're looking at a UK 10-year yield. The selling continues. That was really kicked off by the BOE last week, and they're more hawkish tilt, which of course, as we know, affected the U.S. markets as well. This is the highest gilt 10-year yield since 2019. Let that sink in. This is really a global market sovereign bond yield. I do, though, Francine, want to stick on the Germany story because I think this is fascinating. This is Vonovia. This is a German landlord. There have been some thoughts that the results were bad for landlords because in Berlin, they passed a referendum that would put some of the housing in the public's hands. But a referendum in Germany, it is not necessarily a mandate. And because we didn't have that far left coalition, Maria Tadeo tells us that these results were positive for German landlords. So we're seeing Vonovia shares up more than 4%, Francine.
Yeah, thank you so much, Danny Berg. I mean, I think the main takeaway from the Germany election is probably it's going to be a more centrist government than maybe some of the fears to the right or to the left that we had in the last couple of months. Now, look at what else is going on this week. So today, the Fed Governor, Lael Brainard, speaks at the National Association for Business Economics' 63rd annual meeting tomorrow. A busy day for central banks. Well, Andrew Bailey will speak at the Society of Professional Economists dinner. Jay Powell will testify at the Senate Banking Committee hearing, and Christine Lagarde at the ECB forum. Then on Thursday, the deadline for Congress to pass a stopgap funding bill to avert a government shutdown. And on Friday, Dubai hosts the Expo 2020 Global Trade Fair, one of the world's biggest in-person events since the pandemic actually began. So let's start in Germany. Olaf Scholz and his Social Democrats inch ahead of the CDU in a tight election, though these preliminary results suggest there will be months of government-building talks. Now, for more on all of this, we're joined by Maria Tadeo in Berlin. Maria, both big parties think they have a mandate, so who will the Liberals and the Greens choose?
Yes, Francine, and that is very much the question. We know the SPD and the CDU are competing to trigger coalition talks. We've just heard, by the way, from Olaf Scholz saying the message is very clear from German voters. We've added votes the CDU has lost. We are the ones that should start the negotiation to get a coalition going, and the CDU should go into the opposition. Now, the kingmakers here, you could argue one is the Greens, of course, but I would highlight they came in third, and they say this is a great result for the Green Party. It is on record. But again, Francine, if you look back just a few months ago, the Greens were leading in polls, so they did lose a lot of momentum in the real vote. Now, they have signaled that they're ready to work with both, so really that puts the key to the next government on Christian Lindner of the Liberal Democrats. Now, yesterday he said something that really caught my eye, which is, before I get into serious negotiations with the CDU or the SPD, I want to talk with the Greens to see where are the common lines that we can draw from this. A natural ally from the Liberal Democrats would be the CDU, but again, we're going to see a major beauty contest in order to attract him into a coalition. Both are really going to appease and attract Christian Lindner, who really does hold the key this morning in Berlin, and he is the center of attention here.
Maria, I feel like for those unfamiliar with German politics, the length of this coalition wrangling often surprises some. What's sort of the estimate that we have in terms of time frames and timeline that this could take to actually form that coalition?
Well, Danny, when you look at this from the outside, it does feel like Germany today is a mess. It looks like a mess. But again, one of the things, and Francine highlighted this too before, is that we're looking at two very centrist parties that are pro-European. There is no point of rupture with the establishment, and this is going to be a very kind of pro-European government coming out of this. There is no red scare. There is no far to the left coalition possible here. So again, we're looking at a very centrist government emerging from this election. In terms of the timeline going forward, it really is anyone's guess. We could have a government that is ready to go in 2-3 months, or you could go into the new year without a government in place. In the meantime, Angela Merkel will stay on the interim. Again, we could see Angela Merkel for a long time. It's not a given that this is the last we're going to see from the German chancellor anytime soon.
Yet this thing is far from over. Thank you so much to Bloomberg's Maria Tadeo in Berlin. Now let's turn to Washington, D.C., and House Speaker Nancy Pelosi pledges to pass President Biden's $550 billion infrastructure bill this week. She also signaled that the headline amount on the administration's spending and tax package will be lowered from $3.5 trillion. She spoke on ABC yesterday.
Let me just say we're going to pass the bill this week. I promised that we would bring the bill to the floor. That was according to the language that those who wanted this to be brought to the floor tomorrow wrote into the rule. We will bring the bill to the floor tomorrow for consideration. But I'm never bringing a bill to the floor that doesn't have the votes.
Anne-Marie Horder, Bloomberg Washington correspondent, joins now from our D.C. bureau. So, Anne-Marie, it will be brought to the floor today. The vote will happen on Thursday. How much work has to happen between now and that vote?
Oof. A lot of work has to happen. You heard there from the speaker saying she's not going to bring a bill to the floor if it doesn't have the votes, which makes you think she had promised September 27th a vote on this bill. Representative Josh Gottheimer, who she made this deal with, and some House moderates seem to be okay with the fact that it's going to come to the floor to start the debate on it today, but it won't have a vote till Thursday. So she needs to find the votes by Thursday, which makes you think that she thinks she's going to get all those votes, or she at least sees a path to getting those votes. What really needs to be done now is to get the two factions of her caucus and her party on board with the bigger reconciliation package. Until they can hammer out what exactly they agree that goes into this and the top line figure, then you're not going to be able to get the progressives on board in her party to vote for that bipartisan infrastructure agreement.
Yeah, so Anne-Marie, this is showdown, right, this week in Washington. Yes. And how much of it is actually Democrats, fighting over the substance of this first bill, or, broader influence for the second bigger one?
The first bill is pretty much taken care of, the bipartisan infrastructure bill. That has broad support, Francine. The problem is it's just being used as leverage right now for those House progressives. They're using it as leverage to say, we'll sign up for this, but we will only sign up for this when we get everything else that they've campaigned on. This is childcare, Medicare, pre-K. There's a number of things. Climate change initiatives, when Speaker Pelosi's talking to ABC News, said there needs a lot of work to be done. This is their leverage, and progressives have said for weeks that they're not going to vote for bipartisan infrastructure, even though they do agree with it, but they will only vote for it when they know they have the other package in hand.
And all the while, we're also trying to avoid a government shutdown come the end of the week. Yes. Bloomberg's Anne-Marie Horder in Washington, thank you so much. Now, China may be diving headfirst into a power supply shock. Rising demand for electricity and surging coal and gas prices are driving a crisis that is spreading globally. Bloomberg's energy reporter Stephen Sipsinski joins us now. So, Stephen, we've seen several downgrades to China GDP forecasts off of the back of the potential energy crisis. Just how bad could this get?
What the biggest issue is the rising energy prices, because you see coal prices are going higher, and Chinese coal power plants generate electricity and they sell it basically at a rate that the government decides. So right now, coal prices are too expensive to generate electricity, and that's causing some power plants across the country to shut down. That's already creating an outage for some households even. So it could get bad if these power plants aren't able to sell electricity at higher rates, or if coal prices don't fall down. And if it gets cold, well, then everything goes out the window and demand for all energy and all fuel will rise, and that creates an even further crunch for China.
Stephen, I feel like we only just wrapped our head around the crisis, energy crisis in Europe. If this causes prices to move higher because of what's happening in China, could we see an exacerbation of prices in Europe as well?
Absolutely. I mean, what we're already seeing today, and I just saw it late last week, is there's this bidding war between China and Europe for liquefied natural gas because China needs the gas and so does Europe, and China's just willing to pay more. So the more that Europe bids up, the more you see the European and Dutch TTF prices go up, China's willing to pay a little bit more than that every time that goes up. And so you're seeing this back and forth. Thrown into the mix as well is Brazil. Brazil's having the worst shortage of water. There's a drought there in a long time. That's cutting hydropower and boosting their gas-fired power generation. So these three regions, South America, Asia, and Europe, are fighting over a finite amount of gas. And that's just only going to have a feedback loop for LNG and gas prices going forward.
Bloomberg's energy reporter Stephen Sipsitsky, thank you so much. And of course, that is our big take story today. You can find more on the energy crisis on your terminal or online. Now let's take a look at some stocks moving in pre-market trading here in the U.S. A big one to the upside is Gores Guggenheim, the special purpose acquisition company. This is on reports that it's going to acquire the Swedish EV maker Polestar in a deal worth about $20 billion. So that stock is up 8% in pre-market trading. Another stock moving to the upside is Carnival Cruise Lines. Of course, it reported results on Friday, went pretty well. It actually saw the shares rising for a third day on Friday, and it does look like those gains will continue today. The stock up the better part of 3% in early hours. And finally, we were talking about the gains we are seeing across oil today, and that is reading through to energy stocks in pre-market trading, one of them being Apache or APA Corp. It's higher by about 3.7% before the bell, Francine.
Yeah, I mean, it's amazing. Oil extending a surge as WTI jumping above $75 on this global energy crunch. Now, coming up in the next hour, we'll talk more about the energy crunch. We'll also talk about Germany with Martin Look, BlackRock's chief investment strategist for Germany. We'll talk about coalition building. We'll talk about the impact also it has on renewables in Germany and the rest of Europe. This is Bloomberg.
That can move the fastest and be the most agile, no matter what change comes their way, no matter how fast it comes their way, these are the ones that are going to survive and thrive. China's a good example of that now. You see across the board some of the rules and regulations that are changing, or maybe the uncertainty that's coming out of the Chinese government, and they're trying to deal with some of the local challenges that they have, both in terms of how to manage the asymmetry between the haves and the have-nots locally. They're trying to deal with the issues of managing data and security and other aspects like that. The companies that can operate in China and around the world collectively in a bipolar way are going to be the ones that come out of this on top.
Are investors going to come out on top, though, or are companies looking to do business within China from the United States, are they going to come out on top at the moment, Bob?
Yeah, it's clear that the investors are in for what I think is going to be a bumpy ride. You see it today in terms of what's happening in the marketplace.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger alongside Francine Lacqua in London and Kaylee Lyons in New York. Guys, I have a chart that I really love, and it was flagged to me by Eddie Vanderwall, and I love it because every day I learn something new about what's on the terminal, and it really surprises me. So what I have for us today is data that we have that's UK power generation via wind. Again, I was very surprised that this was on here, and I didn't know why I didn't know about this before, because if you're trying to track the energy crisis in Europe, here is a very good place to look. I also want to welcome our radio viewers as well and explain to you what exactly I have on this chart, because of course you can't see it. So it looks pretty volatile, to be clear. The higher it goes, the more windy it is in the UK and the more wind output in terms of energy we're getting. Now, if you look over the past few months, it's been pretty low. The kind of average here has been far under what we would have seen in past years. And this contributed to that energy crunch we saw in the UK that has led to things like shortage of natural gas and oil as well. But look, it has spiked in recent days. So the question is, are things getting better? Let's ask that question to Eddie Vanderwall of Bloomberg Live, who, Eddie, thanks again for flagging this data point to me. So let me bring that to you. Is this a silver lining? Are things going to get better for the UK energy situation?
You know, I can confirm it is very windy outside. I had to walk my kids to school this morning. And look, yes, as you say, the upside here is that if the wind blows faster, we get more power from our windmills, which means we don't rely so much on natural gas in Europe. But really, you know, the energy shortage in Europe isn't going to go away. And a couple of days of wind is not going to solve this. Really, what we need is three things. We need faster wind speeds. We need mild temperatures so that people don't turn on their heating at home, and we need Nord Stream 2. And that brings us back to Germany, because this is becoming a political issue there.
It is certainly becoming a political issue, and maybe one of the most significant things that Angela Merkel leaves behind. But Eddie, here the concern in the UK is not really that we don't have the fuel, is that the fuel, because of the lack of drivers, can't get to the fuel pump.
Right. So the fuel issue in the UK is slightly different because, of course, as you say, I mean, this is part of our supply chain disruption. All of these things, of course, interlinked. But I think drivers are struggling. And over the weekend, we saw queues. I mean, I had to fill up because my wife had to go to work this morning, and we saw queues of half an hour. It was the shortest that you could find at any petrol station. But this is a wider issue in the UK, right? Because we're struggling not only with gasoline, we're struggling keeping these shelves in the shops stocked up, and I think some emergency methods will have to be, or the government will have to take some emergency steps to address this.
Eddie, it's not just Europe that is dealing with a power crunch. China is dealing with one now as well. How crucial is the China data going to be this week?
China is absolutely important. And, I think, as you say, the energy markets are just so interlinked at the moment, right? Particularly as a result of liquefied natural gas, because there's this bidding war going on. We just heard from your last speaker. But I do think that it all comes back to Germany for me over the next few weeks. Because as Maria Tadeo said earlier, right, we've got the FDP of FPD and the Greens who are holding the balance of power. Both of those parties are anti-Nord Stream. And if we don't see Nord Stream come online quickly, we are going to struggle to see, natural gas flowing into Europe, and that's going to have knock-on implications and could put a drag on the China growth as well.
And if you look at some of the calls from the banks, so at the moment, WTI jumping above $75. If you look at Brent, it's at $79. And then Goldman saying that Brent could go to $90. I mean, what happens if WTI hits 80? What happens?
Yeah, I mean, look, higher energy prices are a drag on the world economy. Every time you fill up your pump, every time you switch on a light, every time you switch on a machine, you pay more money for it if energy costs keep rising. The situation in oil for me is a little bit perplexing because I'm expecting to see OPEC pump into these rallies. The higher oil prices go, the more oil OPEC would like to bring back to the market, because remember, they have put significant caps on their members, and I think they would like to start pumping again. But I think the energy crisis isn't going to go away, even if we see Brent prices coming back. But those are very optimistic calls. And if we do see oil at $90 a barrel, then, that really will put another drag on the world economy.
Eddie, thanks so much. Eddie van der Vaart there from our Bloomberg Markets live team joining us today. Now, of course, for more market analysis, just check out MLIV Go on your Bloomberg terminal. Coming up, we'll have more on your markets. This is Bloomberg. After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
From New York City.
We're here in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology.
and this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua and Danny Berger in London. Now let's get the first word news. And the Securities and Exchange Commission is delaying enforcement of what some bond traders called an unreasonable rule. The measure is intended to protect investors from pump and dump schemes often seen in penny stocks. Previously, the rule hadn't been applied to fixed income, and industry groups say more time is needed to create a framework for the change. The SEC won't enforce the rule for at least 3 months. And China will take further steps to rein in internet companies. A top government cyberspace official told the World Internet Conference that curbing monopolistic behavior and the disorderly expansion of capital are top priorities. He cited the shared economy, online healthcare, and smart delivery as areas of concern. Coming up, we'll talk about China risk and Germany's election results with Martin Luck, BlackRock Chief Investment Strategist for Germany. This is Bloomberg.
boosters work, and they will definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? It should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance, Early Edition. I'm Francine Lacqua with Danny Berger in London, Kaylee Lyons in New York. Matt Miller is off this week. Danny, of course, a lot of the focus is on what's happening with Evergrande. And then here, the German election, no surprises because it seems to be much more centrist, which is giving a nice lift to the markets.
Exactly. I think this is pretty significant after a week where China really dominated the moves in Europe. You couldn't go a day without talking about Evergrande and what that was doing. But here we have finally a local story, German politics being the one to be able to dictate moves in this market.
Now, we're just looking at live pictures from the SPD, Germany's SPD, holding a post-election briefing with the party leader, Olaf Scholz. So more on this with, of course, in a moment with our Chad Thomas in Berlin. So, okay, I'm all over the coalitions. Danny here, and if you look at mathematically what could happen, so there are basically 2 to 3 possible coalitions. Once it's a grand coalition, so let's put that out of the way.
Right.
And then it basically depends on whether, you know, the Greens and the Liberals, the FDP, would rather be with the Conservatives, the SDU or the SPD. I feel like there's a lot of acronyms.
There are certainly a lot to keep track of, but I think it is those two are the key. I mean, Maria today has been talking about this all day. They're kind of the so-called kingmakers, and in terms of navigating these markets, it's their policies that I think a lot of people are looking to try to figure out, what do I want to own? What do I avoid? What does this mean for Germany and the economy to come?
Yeah, and of course, if the Liberals want their guy in charge of the finance ministry, it means possibly a little bit less integration for Europe, but actually nothing too unbusiness friendly. Kaylee, how's it all shaping up in the markets?
Well, Francine, we are seeing a nice lift to German equities today. The DAX is one of the outperformers in the European session, up the better part of 1%. You also are seeing pretty broad-based gains for the Stock 600 as well. Now, here in the U.S., we are coming off a weekly gain for the equity market, and it does look like those will continue today. Futures are off session highs, but we're still up about 0.25% on S&P E-minis. Interesting in the bond market, the older the session grows, the higher yields have become. We're up about 3 basis points now on the U.S. 10-year Treasury yield. We're sitting at 148.45. We're a lot closer to 150 than we are to 140 at this point. And then I would just point to oil continuing its gains, up 1.3% on WTI, trading just under $75 a barrel. You have a tightening market because of that global energy crunch. Now, of course, a lift in oil usually corresponds with a lift in energy-related equities, and that definitely is the case looking at pre-market trading. The Energy Select Sector SPDR ETF up about 1.8%. That'll kind of tell you how the energy sector as a whole will do come the opening bell. And a number of names moving to the upside: Occidental Petroleum, Continental Resources, Marathon Oil, all up in the tune of 2 to 2.7%, Francine.
Now, with no clear majority, Kaylee, in the German election, the decision is yet to be made of who will lead Europe's biggest economy. For more, we're joined by Bloomberg's Chad Thomas in Berlin. Chad, so let's simplify things, all right? You can either see a coalition with the people from Merkel's government and her party, or the SPD, Olaf Scholz, and it's basically the two kingmakers, the Greens and the Liberals, that will have to choose who they form a government with.
Well, that's absolutely right, Francine. And we had Olaf Scholz. He's speaking right now to reporters, and he clearly wants to seize the momentum. He told reporters just minutes ago that he will move forward with trying to form a coalition with the FDP and the Greens. He wants to do that within weeks, he says. And it was also interesting to hear someone from one of the leaders in his party saying that they will not hold talks with Merkel's party to try and form a coalition. So clearly they want to plow ahead with this potential option. Of course, ultimately, it really is up to the FDP and the Greens who they want to be in a coalition with. And they have said they're going to hold talks with one another before they hold talks with the SPD or with Merkel's party. So we'll be watching that, of course, today. And Armin Laschet, the head of Merkel's party, he is meeting with the party leadership of his party right now. We'll be hearing from him a little bit later today to see what their strategy is going forward.
Right, I was going to say yesterday it was a pretty defiant Laschet essentially saying that they too would try to form a coalition. Given the very disappointing results, what does the future and maybe near-term future, the next few months, hold for the Conservatives?
Well, this is really the big question here, and we're sort of hearing, and German media is reporting out of this meeting as it's happening, that he's sort of he's toning that down a little bit, this idea that they have a mandate, but that he will still continue to try and hold talks to form a government. But it will be interesting to see also how there's a Bavarian sister party to Merkel's party. They're really important in all of this. The leader of that party is actually an internal rival to Armin Laschet. So his continued backing, this guy's name is Markus Söder. He's the prime minister of Bavaria. His continued backing will be very important for Armin Laschet, whether he's going to be able to hang on.
Chad, thank you so much for the terrific briefing. Chad Thomas there, our bureau chief. Now let's get straight to Martin Look, BlackRock Investment Institute chief investment strategist for Germany. Martin, if you look at the various coalitions and actually what exactly we could see, what does it mean for German equities? So they've underperformed the rest of Europe. Is now a time where they could come roaring back?
Yeah, good morning, Francine, and thank you for having me. So I think, there is a good chance now that the next German government will be more centrist, either center-left or center-right, with, as you just heard from Chad, the center-right version being slightly less likely. So in any event, there is a strong perception within the German electorate that a big push for investment is needed. That is green investment, that is digitalization investment, that is also investment in infrastructure, mainly in public transport. So what this means for German equities, and of course for the companies that stands behind it, is a big push to more investment. This is definitely good news. And in any event, the next administration will have a long list of tasks to address, and the German corporate sector will be heavily involved. So this is why I think that equity investors are looking positively at this.
So, Martin, is there actually something amongst equities that will do best? If you look at some of the sectors, maybe there's going to be a boost from real estate. The other one, of course, is renewables, because German wind and solar capacity needs to increase by 62% by 2030 if they're going to meet those goals.
Absolutely, and this is just one of the sectors. This is maybe the most obvious one. Renewable energy companies will be in focus. But another sector that will be in focus is technology investment, and that mainly is 5G connectivity, that is digitalization, infrastructure, and more in general. And also maybe as a learning effect from the COVID crisis, a more investment in healthcare, and the connection between all this, healthcare technology, digitization technology, and of course green technology. This is where all these areas come together. So I think that innovative companies with a strong business model in these sectors will be the beneficiaries, and there are probably others, but this very much depends on the agenda of this new administration.
Martin, how will this position Germany versus the rest of Europe in terms of your investment thesis?
Well, I think that, there has been some hesitation on the part of many investors for the recent months, if not quarters, regarding Germany's ability to reform. The last really push for reform that was brought forward by the Schroeder administration in the early 2000s, the Agenda 2010, that is almost 18 years ago. So it's now high time for this country to reform, and there is a lot of dissatisfaction with large parts of the electorate that this has not happened. So I think that, with this, if there were to be a good opportunity or good likelihood in the upcoming election, in the upcoming coalition talks, that this is about to happen, this will also create a lot of confidence among investors, German equity investors, and of course foreign equity investors in Germany, that this is about to happen. This could strengthen German equities versus the rest of Europe, because there has been lots of hope in other countries when Mario Draghi became prime minister in Italy a while ago, etc., when Macron became prime minister in France a while ago, and now there is a real push for a reformist government in Germany as well.
Obviously, there's the political considerations when thinking about if you want to invest in Europe. There is also the monetary policy considerations. And as we see central banks largely moving toward a more hawkish stance, the ECB is a little bit behind. How do you think about that when thinking about Europe?
I think that's right. And I think there is more divergence to come between Europe and the US when it comes to monetary policy. It's only last week that the Fed gave a very clear indication that they are moving a bit faster than had been anticipated by the markets until now. Whereas the ECB is now really trying to step and to kind of tap its toes into tapering the PEP in the first place, but they're making sure that they will keep liquidity supply ample at the same time. And there has been no talk whatsoever in Europe regarding liftoff yet. So the gap between the pace of monetary policy between the US and Europe is probably set to widen. And then it also depends on this new German government as to whether they will form a new shape of kind of cooperation with the central bank, because so much pressure with regard to European integration has been on the ECB so far, and probably too much.
In terms of growth in Germany, so I understand your thesis that it's a lot about investment, that we'll get more of it considering how the election looks to be shaping up. But Martin, to play devil's advocate, I wonder how much room Germany has to maneuver given the constitutional debt breaks in place.
That's a very good question. I think that will be one of the crucial issues here. Of course, there is a strong German push to go back to what is usually perceived in this country as financial stability. And this is much to do with the debt break. So really do not incur further debt. However, at the same time, everybody understands, or most people in this country understand, that there needs to be a big investment push, especially in the fields that I mentioned, digitization, et cetera, green technology. There might be a solution in the future where formally the new government holds on to the debt break. At the same time, there is a kind of an exemption clause for investment in the fields of green technology and digitalization and other stuff that this country urgently needs. So there might be, bringing these two things together is one of the crucial legal tasks in the first place, because the debt break is a constitutional issue. And secondly, also in terms of communicating that to the public, which is very hesitant when it comes to future debt. So I think this is one of the biggest tasks maybe for this new government. But my sense is that the combination of Olaf Scholz and the leading personnel on the part of the Greens and the FDP would be exactly right to do that.
Thank you so much. Martin Look there of BlackRock joining us this morning. Now, there's an ongoing briefing at the SPD headquarters with Olaf Scholz. He's fielded 2 questions in English. He's actually responded in English. This is one of the first time that I think a potential leader has done so. Now, what we know is that, Olaf Scholz said the SPD's policy program contributed to the election results. So he claims he's mandated now to push through as many of his party policies on the possible coalition negotiations. So we'll see whether he gets something through. It could last months. It could last a little bit less, but certainly that's the thinking of the markets right now. Coming up, China's crypto crackdown. We'll discuss the risks of regulation next. This is Bloomberg.
On Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
China has banned crypto close to 8 or 9 times now, I believe.
But now it's directly prohibiting its citizens, which is certainly going to have a dampening effect on their ability to use cryptocurrencies for any sort of transactions.
As a soft power move, this may perhaps be a misstep from China.
Each time we've seen this challenge come up or a more prohibitive stance come up, we've seen truly the resiliency of the community around digital assets, and that exchange volume has moved to other geographies.
Some of our top guests weighing in on China's multi-year crackdown on the crypto industry, which of course was accelerated on Friday with the PBOC saying that all transactions are illegal. Joining us now is Joanna Ossinger, who leads our coverage of cryptocurrencies in Asia. So, Joanna, we obviously had China taking a very hard line on Friday that took Bitcoin down on Friday, and yet this morning we're right around $44,000, essentially back to where we were before the headline crossed. Why?
Right, Kaylee, it's pretty interesting. And some of this is, as the guests were saying before, that people have seen some of this before. And of course, this is a bigger move than we've seen in the past. And you do have numerous agencies that are involved with it. You have about 10 agencies that could be involved, which shows that they might be doing something more widely. But a lot of people in China had already made plans around this. And to some extent, it wasn't all that unexpected. So crypto is right back to where it was before.
Yeah, Joanna, I mean, one of the things, and actually, that's been doing the rounds on social media, if you're a crypto bear, what would it take you to stop being a crypto bear? And this is really, is this the only question that we need to ask ourselves?
That is a good question. I mean, there are times where it looks like things are going down, but you have had just this enormous rally over the past year or so. And if you've been in it for even 5 or 6 years, you've done really, really well. At the same time, there are cracks around the edges. There's a lot of question with regard to global regulation, not just out of China, but for certain people in China are looking at how to deal with this, looking at workarounds and kind of figuring out what they can do now that this is happening. But again, if, people are expecting even a full ban, this is not too much of a surprise. And people keep saying, oh, after China makes a move like this, crypto goes higher. That's the narrative from the bulls.
Yeah, I mean, it does seem like it takes a lot, Joanna. So if China is cracking down on crypto more and there's a vacuum, what fills that vacuum?
Well, it could be the digital yuan, Danny. I mean, that's one thing, that's one theory that they're making way for their own digital currency. And of course, there are concerns about retail consumers being scammed. There are scams in crypto, so, and as well as people taking assets abroad. So there are numerous reasons that the PBOC might be doing this, but the digital yuan does loom large in this discussion.
Joanna, thank you so much for the terrific briefing. Joanna Ossinger there on crypto. Now, later today, we'll also be speaking with the chief executive and co-founder of eToro, Yoni Assia. That's at 1:30 p.m. in New York, 6:30 p.m. in London, and this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Danny Berger in London, Kaylee Lyons in New York. We're also joined by Tom Keene, co-anchor of Bloomberg Surveillance. Tom, I know you have a great chart for us, and I know you're looking at inflation points.
Well, we're looking at the markets. The markets are really, really interesting this morning. The correlations and some of the breakouts or near breakouts that we're at. Speaking of a breakout, and this does fold into the German elections and all that we're going to see in the coming 48 hours with our great coverage, and this is nothing more than the German 10-year yield adjusted for inflation, and down we go. This is a banded range going back a good 10 years, and down we go, a solid 4 standard deviations. And I'm sorry, this is the great, great financial challenge to the coalition.
Speaking of standard deviations and massive moves, Tom, we're looking at near 150 on the 10-year Treasury yield. I mean, we're 16 basis points above where we were on Wednesday after the Fed decision.
I know you saw the opening script for what we're going to do in the next hour, and it's right there with the yen moving out to 111. What we see in oil with a Brent crude near $80 print. Yes, the 10-year yield's front and center with a 150. And the pros, Kaylee, what they will say is it's rate of change. It's the movement out there. Francine, Kaylee is expert on the calculus of all this.
Expert. I know. 2 standard deviation, Tom. It's all thanks to you, Tom, our great master of great elegant
Such a
charts.
nerd alert.
Tom is my calculus coach.
Yeah, run as far
Tutor.
as fast as you can. Markets are interesting.
My CFA coach. It's not going great. Tom, oil. Oil's the big one, actually, that I know you're
really
you're
is.
having what happens if WTI is 80?
Yeah. Well, I think John Farrell's accurate in that Francisco Blanche of Bank of America stopped the world about 8 days ago, maybe 10 days ago, modeling out above $80 a barrel. We've heard a lot of people model out the microeconomics to $80 a barrel. Blanche goes further. He goes out to $100 a barrel. And again, Francine, it's the rate of change up. I'm looking right now at Brent crude, $79.12 a barrel, and we're getting there.
I mean, speaking of rate of change, what's happened on the UK gilt yield is pretty significant, too. I mean, yes, it's a bond on the periphery, but at its highest since 2019. I mean, Tom, what do you make of this movement being dictated by some of those bonds that we wouldn't really think would be the catalyst to push around the Treasury?
Well, they're correlated again, and I would say the central banker to the world is the key one, and that is Jerome Powell. A lot of speaking, I believe, going on this week. But, you know, I look at gilts and I look at Indonesia and I say it's all linked into U.S. 10-year. And again, the real yield, I look very carefully at the real yield chart today, and it really technically hasn't broken out, even though we have a lesser negative number on that. It needs to go further before I go, oh, wow.
Tom, thank you so much.
Sure.
Tom says, oh, wow, you better watch
We got
out.
through
Tom
this
Keene,
without
co-anchor
talking about
Bloomberg Surveillance. I know, not yet. I know. We don't mention the Spurs, Tom, on this show. Let's also look at what else we're watching today. Kaylee, away from football, English football, we talk about the Fed.
As exciting as that is, there is a lot of Fed speak to pay attention to. I would also point out, as we were just talking about yields with Tom Keene, the belly of the curve, the 5-year rising to 99 basis points, which is the highest since February of 2020. Of course, the belly of the curve pricing in a different Fed policy than it was just a week ago. And it'll be interesting to see how much color we get on that when we hear from Charles Evans of the Chicago Fed, Lael Brainerd, the Fed governor, and New York Fed President John Williams throughout the day today. They are, of course, our voting members. They lean in the more dovish direction. So it'll be interesting to see what they say about when liftoff could come, given we all are pretty sure that tapering is going to come in November, Danny.
Kaylee, I'm watching something a little closer to Francine and me here. Of course, it could have implications, or it rather does have implications for the entirety of the world, and that's how the energy crisis is evolving. It's become a very large political issue in the UK. They're looking at bringing the army in to drive tanks because there's a lack of drivers for that petrol. Politicians have had different posturing saying, don't rush to the gasoline pumps. That's what's driving this. So I'm really interested to see how that evolves, specifically what politicians will say, Francine.
Yeah, I can't find a taxi anymore. I know you're probably the same. I mean, it does have like a repercussion on your daily life. In London, the other thing we're watching is coalition building. Now, it's interesting to hear from Olaf Scholz, who was just speaking to reporters at SPD headquarters. He was saying, look, he wants some kind of coalition and government in place by December. He was really funny. First of all, he took two questions in English, and a British journalist asked the most pressing question of the day, which is, will Olaf Scholz send German truck drivers to the UK to help them out of the crisis? So he was very funny. He says, look, the room erupted in laughs, and he did not commit to send drivers over. But he was quite also elusive in saying, look, the conversations that he's having with his possible coalition partners, he does not want to do in front of the media, but he called them friends, and we know that they've reached out. So it'll be interesting to see where we end up in the next couple of days. More Bloomberg surveillance up ahead. We'll hear from Jim Caron of Morgan Stanley, amongst others. So we'll, of course, have a full roundup of the energy crisis, the debt ceiling, and treasuries. This is Bloomberg. China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper, and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
exit, if you will, from these emergency policy settings has begun.
The ECB is curbing their PEP purchases. You know, the BOE wants to raise rates. The Fed's moving towards exit.
The 10-year Treasury is probably right about where it should be based on where we're headed.
The Fed's already positioned itself behind the curve vis-a-vis the last cycle.
The Fed has said it's going to let inflation run, but against that, I would say inflation is running at a pretty furious clip.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Let's get this week started from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market on the S&P totally unchanged. On the NASDAQ, we're softer here, down 50. Tom Keene, it's about the bond market. Yields on 10s approaching 1.5%.
Yeah, John, I'd go right away from the equity market, and it is absolutely fascinating. We are buttressed up against breakouts. You mentioned bonds. I'll let you talk about that with Lisa on a 150 10-year. Look at oil, John. We don't have an 80 print, but it's moments away.
150 insight on 10s, Lisa. On 5s, we're looking at 1%.
Yeah, to me, this is really a question of, are we seeing just the beginning, or is this perhaps just the end in terms of a taper tantrum or response to a global withdrawal of pandemic-era stimulus? How much is this going to continue as we see it across the curve? I mean, 5-year notes in particular, with yields at the highest since February 2020.
We've got to talk about this German election as well. TK, let's get straight to euro-dollar intraday. Euro weaker by 0.2%. Yeah. It's a break of 117. And here's the quote from Kick Juice of SocGen. Europe needs a huge rebalancing between fiscal and monetary policy before the euro has any chance of moving sustainably above 122. And a broad-based coalition is unlikely, Tom, to deliver it.
Yeah, he wrote that note at Arsenal. He had rock star seats. He sent me a photograph of it. It's just absolutely amazing. We'll get to that. But to Mr. Juke's idea here, these are markets recalibrating, and some of it is the politics of Germany, John, but much more, it's this real yield market where you look at the litmus paper of those negative yields, and they're, you know, it's not a breakout to me, but it's a lesser negative yield pressure.
Here's the question, Tom. How loose will any tightening actually be? That's the delicate dance playing out through the belly of the curve right now, right?
Yeah, I would look at the belly of the curve as we did this weekend, and you know, I would suggest, John, that this is a way more interesting market Monday. No, I can't be serious, John. After what I went through yesterday, John, I'm in trauma. You're lucky I'm here this morning, or unlucky I'm here this morning, and my message, John, is the markets are really interesting right now.
You're just bouncing from Spurs to the markets, from the markets back to Spurs. Let's get to the markets. Your equity market looks like this on the S&P 500. Futures totally unchanged. On the NASDAQ, just a bit softer here. We're down 53. We're negative a third of 1%. My attention immediately drawn to the bond market. Yields approaching 150 on 10s at 148.71. Yields higher by 3-4 basis points. 5 weeks of gains for a 10-year Treasury. The previous 4 weeks, though, not doing much at all. It was all about last week. Tom mentioned in crude. Lisa, it's 5 weeks of gains for crude as well. A break is 75 earlier. 74.90 by more than 1.2%.
And there's a sense out there that this pressure could continue, especially with some of the natural gas shortages in Europe that we're also seeing bleed into other areas. And of course, there's a self-imposed energy crisis that seems to be percolating in China as well. We will get to that. Meanwhile, we get lots of Fed speak this week, tons of it. And perhaps we can clarify just where we are in the tightening or the perhaps not as easy policy backdrop that we're in right now. 9 a.m. and noon, we're going to get some words from New York Fed President John Williams. I'm curious to see how he dovetails some of the pressures in the supply chain with inflation, with Fed policy, considering the fact they have no effect on this particular aspect of inflation. At 1 p.m., I'm watching this. Tom, I know, does not care about Treasury auctions. This one is important. The U.S. Treasury Department is selling $61 billion of 5-year notes. This happens as 5-year yields climb to some of the highest levels since February 2020. This matters. How much demand is there for yields at this level? And today, of course, there's the policy uncertainty that we keep talking about. House Speaker Nancy Pelosi said that she plans to bring the $550 billion bipartisan infrastructure bill to the floor with the expectation of a Thursday vote. This is going to be controversial. It is not about this bill, which is expected to pass. It is about the other $3.5 trillion plan that is now much less than that, which has a lot of controversy, John, among a lot of the members.
Lisa, thank you. In about 15 minutes' time, we'll catch up with our Washington correspondent, Bloomberg's Anne-Marie Hordern. We start with the bond market. Yields on a 10-year, 112.58 in early August. Right now, 149. on a 10-year, up 4 basis points and approaching 150. The perfect guest to start this week's coverage with. Jim Karen of Morgan Stanley Investment Management, fixed income portfolio manager. Jim, first question, sir. What are we doing back up near 150?
Well, good morning. Thank you for having me on your show. Look, I think there's a couple of things that are going on. One of them is very technical. One of the reasons why yields were so low was because the Treasury General Account had been drawn down so much. Now, that's really technical speak for saying that there wasn't a lot of net issuance of U.S. Treasuries over the last couple of months. In fact, nearly zero net issuance. Today, all of that is starting to change. A lot of things are changing right now that are leading to higher yields. Number one, now we're going to start to get net positive supply, so more positive net supply is coming to the markets. That and the fact that we're getting closer to a deal on the deficit. Then the question becomes, is it going to be a deal on the infrastructure bill? And the question then becomes, is it going to be deficit financed? So that's another argument for higher debt into the future. The third point is tapering. The Fed has announced pretty aggressively, it seems like at the September FOMC last week, that probably by December they're going to start tapering. So all of the factors that were keeping yields lower in the second quarter and for part of the third quarter are now starting to run in reverse, and you're seeing yields start to move higher, not to mention that energy prices are moving up, and even some of the COVID cases are on the decline. We could be setting ourselves up for a much stronger, much awaited for fourth quarter, and all of this is pushing Treasury yields higher, and it makes sense.
Yeah. Jim Karen, when you're on the Gorman Gulf Stream, you're flying at 32,000 feet and you're looking down in the yield market, what is the 10-year yield where you signal shift or you signal trip point? We're at a 147, maybe 150, but what's the level where you go, things have changed?
I think we're past that. I think it's around 140. The fact that we've gotten back above 140 is telling us that the correction lower in yields is over with. We have to start thinking about yields progressing up back towards the March 31 highs, around 175, even up to 1.8%. And it's even possible that you could start to even test 2% by end of this year, beginning of next year. I think it would be hard to get above 2% and stay there, but I think that's a trajectory that we're on. And the fact that many people have squared up most of their positions, I would say the market's not overly short, so the technicals are suggesting that you could actually get a push higher. So, Tom, I think that we've already tripped that switch and that we're already in the mode to get towards higher yields, plus all the supply that's coming.
Jim, you talked about higher oil prices. We also talk about supply chain disruptions. Are these events, are these appearances inflationary or disinflationary?
Lisa, absolutely. This is a great point. I'm glad we're talking about this. This is inflationary. What we're going to see are rolling supply shortages. And so yes, one day it might be one thing, another day it could be natural gas, another day it could be oil, and you're going to start to see this just on a rolling basis going forward as these supply chains are getting readjusted. And then when price gets too high, demand will fall, that asset price will come down, and it'll be another commodity asset's turn to start to move higher. So I think this is getting embedded importantly into the psychology of consumers that prices are going to stay perpetually high. That doesn't mean that we have runaway inflation. It just means it's going to be harder to get below 2% inflation. So now think about this. Even the people say the Fed was hawkish. The median dot in 2024 was at 1.75% for the Fed funds rate. But inflation is supposed to be between 2 and 2.5%, or at least it's being expected to be between 2 and 2.5%, which means that the real Fed funds rate is still going to be minus 25 to minus 50 basis points. This is still very accommodative Fed policy at the current moment. There's nothing hawkish about this.
So, Jim, let's put all this together. When you say it's hard to get below 2% on inflation, just explain to us in a couple of lines why it's difficult to get above 180 on a 10-year yield.
Yeah, well, for right now, we are still doing quantitative easing. So there is still some asset purchases that are going through. Bond yields around the world, although they are starting to rise, we're seeing that in Europe, are still very, very low. So I think that there is an interest rate differential, and then it'll come back down to the dollar appreciation. At least in the near term, you could see some dollar appreciation. That would keep foreign investors interested in the U.S. Treasury market. But that, I think, is a cycle, too. I'm a long-term dollar bear. Eventually, these deficits and everything else is going to catch up to the dollar, and that's going to push it lower. And foreign investors, which the U.S. demand, relies on heavily for demand, is going to require higher yields to entice foreign investors to come in and buy U.S. Treasuries.
Jim, thank you, sir, as always, and have a good week. Jim Caron there of Morgan Stanley Investment Management, the fixed income portfolio manager, with your 10-year yield approaching 150 at about 149. TK, here's another call from Morgan Stanley this morning, just dropped. Amazon price target cut to 4,100 from 4,300. It's still pretty bullish, let's be clear about that. But the reason for the price target cut is interesting. They write about a rising headcount and higher wages resulting in profit pressure for the online retailer. That could be the discussion we have through earnings season, which Tom kicks off in about 2 weeks.
Yeah, absolutely. And what's going to be interesting there is there's no discussion of revenue, and that they may have bang up revenue company to company, particularly among these tech winners, but they're overwhelmed by the costs that we're all feeling out there. John, off Jim Caron, I would notice there on dollar yen with 1, 2, 3, 4 days through. It's the rate of change we're seeing in some of these currencies.
This has happened quickly.
It's happened quickly is the key word here. That's an adverb, John.
Thank you, Tom.
Quickly, like Arsenal. Arsenal happened.
That happened quickly in
that
the
happened
first
quickly as well.
half. Yes, that happened quickly too. Tom Keene, Lisa Bramage, Jonathan Ferro, on top of the market, not just the sport.
Trade Kane right now.
Your bond market, 149. I think that's what he wants, Tom.
Yeah,
that might be the objective here. Harry Kane wants to get to the exit.
It looked like us on Friday. We were sleepwalking.
You were sleepwalking on Friday. Lisa and I were at work. 149 on 10s. From New York City this morning. Good morning. Big week ahead. Looking forward to covering with you. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. In Germany, Olaf Scholz of the centre-left Social Democrats has defeated Chancellor Angela Merkel's Conservatives in an extremely tight election that could lead to months of complex coalition talks to decide who will lead the largest economy in Europe. Scholz's SPD won almost 26% of the vote. The Christian Democrats, led by Armin Laschet, got 24%. German parties are meeting today in Berlin to discuss the next steps. House Speaker Nancy Pelosi is promising to pass President Biden's $550 billion infrastructure bill this week. She's also signaling that the headline number on the administration's spending and tax package will be lowered from $3.5 trillion. A split between moderate and progressive Democrats has set up a showdown over the president's economic agenda. The head of the CDC warns that parts of the U.S. health system are in dire straits because of the spread of the COVID Delta variant. Rochelle Walensky told CBS it is forcing some states to prepare for rationed medical care. Idaho and Alaska have said that hospitals can begin to prioritize who is treated. In the UK, pressure is growing on Prime Minister Boris Johnson to do something about a supply chain crisis that has led to fuel shortages. Pumps ran dry at some gasoline stations because of panic buying. The government has temporarily suspended competition rules and allowed companies to coordinate fuel supplies to the most affected regions. Meanwhile, Johnson has done a U-turn, relaxing immigration rules for those foreign truckers. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
嗱，如果佢唔係屬於呢個風險嘅地區咧，就全部由聽日開始咧可以恢復翻回港易嘅安排啦。呢個計劃咧就將喺9月15日咧就正式推出，名額咧係深圳灣口岸同埋港珠澳大橋香港口岸每個口岸每日各1000人，咁即係話每天咧係合共有2000名非香港居民可以通過來港易咧係豁免檢疫咧係抵達香港。
When you went to Harvard Law School, did you say, maybe someday I'll be on the Supreme Court?
Anybody who thinks maybe someday I'll be on the Supreme Court, I don't want to say there's something wrong with him, but there is something wrong.
I want to ask about your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Let me just say we're going to pass the bill this week. I promised that we would bring the bill to the floor. That was according to the language that those who wanted this to be brought to the floor tomorrow wrote into the rule. We will bring the bill to the floor tomorrow for consideration. But you know, I'm never bringing a bill to the floor that doesn't have the votes.
Speaker Pelosi teeing up a vote later this week on ABC over the weekend. From New York City this morning, good morning. Tom Keene, Lisa Abramovitz and Jonathan Ferro. Your price action this Monday morning shaping up as follows. On the equity market, up 4, advancing 0.1% on the S&P. The NASDAQ heading the other way. We're down 36 there, negative 0.2%. The bond market will get your attention. 149 on 10s. High of the session, 149.58. This is a big turnaround from where we were at the start of August, from 112.58 to approaching 150. Into the FX market, it's a break of 117 on euro dollar, 116.97. We're down there 0.2%. The German election, Tom Keene, inconclusive. This could take months to work out what the leadership, the coalition looks like in Europe's largest economy.
Yeah, the definition of the left in a modern and new, a generational shift Germany after what we saw of the more than decade of Angela Merkel. Right now, we're going to look at the politics and the shifts in Washington. Many of you following over the weekend understand this, and it really comes down to it's time to play hardball like the ascendant St. Louis Cardinals or the ascendant dreaded New York Yankees. Wearing pinstripe. On radio, it looks beautiful. Wearing pinstripes on radio, Anne-Marie Horton joins us this morning in celebration of her Yankees. Anne-Marie, Speaker Pelosi's got to go out there and play hardball this week. What is the price of a vote? What does she give the liberals to get them to vote for this set of packages?
Well, what she needs to do and what the leadership needs to do is to just move further along on reconciliation so that the progressives can go into that bipartisan infrastructure vote and actually vote yes for it. We also heard from the chair of the Progressive Caucus on Sunday, Pramila Jayapal, saying the speaker knows she just doesn't have the votes right now. Remember, that vote was supposed to be today on bipartisan infrastructure. Representative Gottheimer, who really worked out this deal with Pelosi, said, we're reasonable people. We're happy to start the debate on Monday, but this really is a fast timetable for Thursday to have that vote.
So you put a 6-lane highway through the Bronx, just as one example. That's not going to do it. I don't understand what she gives up to get liberals/progressives to vote to save the moderate Democratic Party. What does she give up? I just don't get it.
Well, they just don't want to lose their leverage, which means that the reconciliation process has to be fast forward and they have to be in a place where there is some sort of acknowledgement that they agree on what is going into that reconciliation package. Right now, we're still waiting on a number of details, including SALT deductions, that cap, what's going to happen there, as well as the top line figure. She also said in that interview with ABC that it is pretty much known that it's not going to be $3.5 trillion. Okay, so what is that top line figure? That's really what these negotiations are going to be about. But we should also note that it is very strategic of her to hold this vote on Thursday. This is when surface transportation funding expires. This is when the next morning at 12:01 a.m. Friday morning, the government technically shuts down. It would put the progressives in a very hard place to vote no.
Anne-Marie, how high are the stakes right now for Democrats?
They're incredibly high in the sense that you have a ton of infighting within the party to get this done. But I also don't think we should lose fact of the sight with E.J. Diana has really hammered this home this weekend in the Washington Post, that the fact that the Democrats know that this is their moment. And unlike what many people like to think about them, they are not going to potentially squander it, or they don't want to come back in the midterms and say, we had the chance to do something that we campaigned on in the last election and we didn't do it. So there is this sense that they will not squander this moment, but it's going to be very difficult.
Meanwhile, we have Nancy Pelosi saying it's self-evident that this bill is not going to be $3.5 trillion. Do we have a sense of what the headline figure is closer to be?
We don't yet in terms of in black and white, but we've heard from moderate Democrats signaling that they'd be more comfortable with the likes of around $2 trillion likely. But President Biden on Friday, when he spoke about this in answering some of these Q&A after his COVID speech, he was talking about the fact that he would go to some of these moderate Democrats and say, okay, well, what is it that you can live with and cannot live with? And they start listing what they want in the bill. He says it ends up being more than $3.5 trillion. And that's why these negotiations are going to be very tough. We also know that Senator Schumer, Speaker Pelosi, Treasury Secretary Janet Yellen had a meeting and they got to this, quote, framework of what the tax proposals are going to be and how they're going to raise those funds. But yet again, we just don't know the details of it yet. So the next 4 days are going to be crucial.
So we get to Thursday, then what?
Get to Thursday, we have this vote on bipartisan infrastructure, remember, but for that vote to go through, for Speaker Pelosi to have all the votes lined up, they need to be in a very good place in regards to reconciliation. Right. The other thing also to remember, of course, is we need the stopgap funding measure to go through because the government this week runs out of cash. The Senate will be voting on that today, but remember that's also linked with the debt ceiling, so that's likely going to fail. So amongst all this debate and negotiations to move the president's economic agenda as well forward, Congress needs to also keep the government funding past September 30th, as well as avoid a debt ceiling technical default.
Is this like late night sessions? I mean, have we devolved down? We had the Prime Minister of Greece on the other day. Anne-Marie, have we devolved down to Greece, where we're going to be here at 3 a.m. arguing about this?
Potentially. I mean, if there's a vote-a-rama at any point, likely it'll go through the night. There is a meeting this evening with the Democrat caucus at 5:30 p.m. The House Budget Committee met this weekend, which is very rare, and this is just to push things along as quickly as possible. But I wouldn't be surprised if things went late into the evening or the early morning.
Anne-Marie, on the week ahead, our Washington correspondent down in D.C. Anne-Marie, thank you. Tom, I've brought this up with investor after investor over the last couple of weeks. I'm really struggling to get anybody interested in it. They're just shrugging their shoulders saying this will get dealt with, this will get done.
I agree. I agree with that, and maybe it's a new form of gridlock, whatever you want to call it. But I must admit, John, it is off the radar for most people looking at finance and investment. They're looking at the market movements, and as Jim Karen said, where is the 10-year yield that signals shift? Karen says we're there.
We're through it, approaching 150. Lisa, I know you're hearing the same thing.
Yeah, well, just going back to the infrastructure idea, this idea that nobody actually cares. People don't care as long as the taxes on corporations don't go high enough to actually put a bite into equity valuations. That seems to be people's major concern. It's all about trying to mitigate potential risks, whether it's higher yields or higher taxes. That's what we hear.
Oh, they care about that. I just mean they don't care about the debt ceiling debate. Yet, at least, anyway.
I was talking to Ira Jersey on Friday, and I basically said, I really don't care about this. I hate discussing this. I really find it irritating.
You're not alone.
And he said, we actually have to care because the U.S. government has never actually defaulted.